So testing. Okay, let's see. It is a new laptop, so I gotta kind of get used to it over here. But I think I installed everything we need. It's recording. Okay, good to go. Yeah, I miss you guys. It's like you take 1 week off and it doesn't feel right for me. But I still keep the analysis going, and I think the last 2 weeks gold really outperformed. Right, performed so much that I had to take some gains off the table and let the asset class cool down and then revisit. Have we met, gentlemen in the back? I feel like we met before.
We have. We met last Saturday at the Silicon Valley networking event.
Okay. But we didn't get to meet in person, did we?
We spoke very briefly. So my name is Morris Hagel.
Hey man.
Nice to see you.
Hey, thanks for coming out.
Sure.
You came to the mixer. This is the other thing that I do pretty frequently. Oh, Ed. Okay, you're good. Yeah, this is the other thing I do pretty frequently. I teach every Sunday, focused on so I was gonna say networking, the investment stuff. So you heard last time, right? I basically have two deeply burning desires. My number two is to actually be one of the most known, well-respected person in Silicon Valley for tech, entrepreneurship, startups, and so forth. Help startups grow. So that's sort of like a little passion I'm developing. But my number one desire is actually be a world-class investor. So I believe that if you want to do that, you got to hit the whole 10,000 hours thing, right? If you actually count how many hours I taught here, it's nowhere near 10,000 hours. 100 lectures is only 200 hours, right? Because we're doing 2 hours. Huh? To prepare, yes. So that's like numbers that I'm not counting. So I don't even think I've hit. I mean, how many years would 10,000 hours be? Like 10 years? Would you say 10 to 20 years? 5 year full time, right? Yeah. So pretty aggressive stuff. Are you here for the investment club?
Yeah.
Or I'm sorry, there's people outside. Are you here for your realtor, or are you here for the investment club? Yeah. This is it right here. Welcome. We're just kind of getting started. But yeah, that's me in a nutshell, guys. Today's gonna be, it's only 10. There's people like JC who came here. He was front running the markets. He came here an hour early, so I have to dance with him for a bit. But I normally like to let people come in for 10, 15 minutes, so we can chat about anything.
Here like an hour early.
Yeah, JC came here an hour early. Bernard came like 45 minutes early. He did 45 minutes early too.
I thought I was early until I saw them.
So just for a good topic, since China's sort of top of mind in the world right now.
It is, yeah.
If the China situation was to improve,
yeah.
Let's just say that hypothetically, let's just say the tariffs are all taken off the table.
Yeah.
The United States says no more tariffs, China says no more tariffs.
Right.
What stocks do you think are the most likely to outperform the average?
Emerging markets.
Well, you don't think like the Cisco's and the American?
Sorry. So I gave you like a high level answer, and what you're probably looking for is a security answer. I gave you a segment answer, right? So the segment answer is actually right here. So we're kind of skipping ahead, but this is where I project the same type of returns that we'll see. So you'll see China actually outperforming. I'm bullish on emerging markets right now. It's sort of an investment thesis I'm developing, but it's sort of a next cycle play. So right now, current cycle, we're kind of like at the top of the market, right? So how do you play in the next cycle when we kind of correct and then move up? So my next cycle play is going to be hard on emerging markets. Speaking of China and Trump too, we're going to talk about later today how he made several tweets talking about how Chinese USA multinational companies in China pull your companies out of China. So what's the economic ripple effect of that?
Right.
So we started talking in the group this week saying that countries like Vietnam and India or Indonesia are going to benefit significantly, right? Because the supply chain infrastructure takes years to develop in China. So for Trump to say something like that, now multinational corporations, let's say Costco, are going to have to rethink about their supply chain. So they're going to invest infrastructure money into countries like Vietnam, which also has close proximity to China, right? So the skill set is kind of close, versus like India, you kind of have to fly them over. So that's kind of how I'm thinking about it. And so there's, in the next cycle, I'm getting extremely bullish on emerging markets. Now, emerging markets is a segment. You could sub-segment and play Vietnam, Indonesia, India, specific ETFs, which we'll look at today. So
and
that's
wild card stock, of course, is Boeing.
well. So one more on the emerging markets. So the next cycle is when we aggressively devalue the dollar. That will be a tailwind for emerging markets, which is really good.
Right.
So this is it's getting really exciting, but I know the timing's not there yet because right now I think the dollar could go higher. So I think emerging markets could go maybe lower in the short to mid to even the 1 year term, because the next cycle is when emerging markets come into play. So right now in the next cycle, I'm going to be looking at emerging markets. I'm going to be looking at commodities, especially uranium. I'm getting very bullish on uranium. Uranium it's becoming national security risk, right? Because Russia and China have been cornering the uranium processing market, meaning like you mine the uranium, but then you have to process it. So they cornered that market like 90%. Russia did. So whatever, if we want, clean energy of the future, then we got to go through that processing, which they own, right? So with all this trade war stuff, it's not going to look too good. So I think Trump is going to give the tailwind by subsidizing these uranium USA companies. Oh. So I'm looking at very depressed, beaten down uranium companies.
That's smart.
That I think could go really high, just like gold, just as aggressive, but it's not time yet. So everything's all about timing, I feel. So right now, if you ask me the most bullish trade I have, or I feel is, you probably noticed like the shift in my style of trading too, right? Maybe before November was when we started going into gold. Before November, I was aggressively long momentum growth stocks. So stocks that are just like going up, like Salesforce and Microsoft, they just keep going up, right? Since November, December, then the new year, now I'm kind of shifting my behavior in trading, where now I'm looking at beat down securities like Carbon Black and Pivotal, which got acquired by VMware in the last 2 weeks.
Right.
So Carbon Black got acquired for $26, right? That thing would have went to $100.
You think so?
I know so. Now I'm bullish on VMware. Very bullish, right? So VMware went down. If you don't know the logic behind that, when VMware buys something for $5 billion, they expense, so it goes down, right? And then Carbon Black goes up. That would be something. If you trade that, it'd be like merger arbitrage, right? You're arbitraging this event opportunity. So we'll try to go over all that today, but we still got like 10 minutes. Today's session, I guess I drafted this week about 35 pages of content. I kind of just like put together what I liked and heard this week, because I try to stay sharp on the markets. So I think the session is going to go 2 hours and 30 minutes. But you guys are always welcome to get up, get some water, leave, use the restroom or anything. Just let me know, and feel free. You'll feel comfortable. I blasted the AC, so hopefully it's going to be a cool day in here. But yeah, I miss you guys. It's been 2 weeks. I didn't know. Some days it's I don't know what to do with my weekend. That's how. Reason being is I don't know if it's like as you grow older, right? If you guys understand economics and utility, so utility is kind of like the value you derive from like a certain activity you do, right? So a lot of my friends, they still get a lot of utility or value from things like going to the mall and stuff like that. But I go to the mall these days to kind of look at it more from like, okay, like yesterday I was in Los Altos walking to downtown, just kind of exploring the foot traffic and seeing how like, okay, it doesn't seem like anyone's really walking around outside these days. I wonder what people are doing around the time frame from like 2 to 5 p.m. I'm guessing around 2 to 5 p.m. on a weekend, people are at home, taking a nap, browsing on the internet, but no one's really out foot traffic wise. Because I took a little break because I was studying all day yesterday. I was doing research. I was like, okay, I'll go to Los Altos and just check out the the real estate, commercial real estate or whatever. And yeah, there's nobody, man. I like to analyze these things, but I do want to make a comment and say I've been noticing a lot more homeless people in the Bay Area.
Absolutely.
It's just like it maybe in the last month or two, my interaction, like seeing it, I don't know if I'm judging this off of a bias. Hey Doris, we missed you too. I don't know if I'm judging this off of like a bias that's just like, okay, I'm seeing that, but I'm starting to see them in areas that I've never seen them before.
Yeah, absolutely.
So now I'm wondering like, well, this is interesting times, right? There's a hurricane, there's the Hong Kong violence or protests that's really serious. Market volatility, gold's going up, dollar's rallying. Higher dollar means pressure on the economy and all that. So I don't know. Is this like trickle down economics where I'm seeing more homeless people because maybe people at the top aren't paying so much to the the economy anymore? So very interesting times. I remain bearish, but also bullish. I know it's weird, right? I'm bullish on gold. I'm kind of bullish on equities, but also bearish. I'm bullish from the sense where I'm more bullish on value stocks and dividend stocks, but I'm scared of growth momentum stocks right now, which I'm normally a player in growth momentum stocks. So, for example, growth momentum stocks would be like a MongoDB, right, or like a Salesforce, or not really. Well, SAP hit some growth with the Qualtrics acquisition, but I'm not playing those as hard as I was November of 2018 and previously. Now I'm playing mostly, again, value stocks, dividend stocks, kind of building out that portfolio. I'm aggressively going into gold miners. I'm digging deeper into gold miners right now as we speak, meaning as in what you see on the exchanges today are like billion-dollar miners, right? I'm looking at microcap miners. So meaning these companies are like 50 cents, 50 million, right? And so we're gonna look at one 50-cent gold miner today and why I feel extremely bullish on the security. You guys wanna know the ticker symbol is THM, and I'll give you like a little rundown on why I feel pretty bullish on this. This is you're gonna be like, it's a penny stock. Yeah, it's a penny stock. It's only 100 million, right? But the people behind this, John Paulson, the guy who made like billions of dollars in 2008 shorting the mortgage-backed securities market, he has a significant position in this. So yeah, I did a starter position on this. So what I did this week was, the last 2 weeks was gold went up a lot. I took the gains off the options, and then I financed that and bought about 5,000 starter position on this, 5,000 shares on this. So I plan to add, keep adding 5,000, maybe up until like 25,000 shares, and kind of just hold for a longer term. So that's the trade thesis on this one. If we're going to dive deeper later into it, but you're going to see John Paulson. He has his own partner analyst in the company to manage the company as well. So this one's an extremely leveraged gold miner play. So it's not like Kirkland Lakes or Barrick Gold where it's like 3 billion, 5 billion, 30 billion, whatever, right? This one's only 100 million. So upside's a lot more than those companies.
Can I offer some advice on this?
Sure.
So just be careful placing a market order on any low volume.
Yeah, you start
stock
drawing the candles itself.
No, I'm just saying, I would never do a market order on a company like this ever. You can only do a limit order because you could move the price of that by 2%.
Yeah,
With a $20,000 purchase at 630, that could be enough to drive it up artificially when you didn't have to pay it. So
Yeah.
just be
So
careful with,
So the rule of thumb is actually right here. You look at average volume, right? Because I know the volume you trade. The volume you trade is like 20,000 shares.
So it's 100,000 shares in the stock.
So you want to be 1 to 2% of volume. If you go to 5% of volume, then you're moving the charts. If you're doing 20,000 shares in one go, you're moving the charts because average volume is only 135.
So it's 130,000 shares in the stocks at 50 cents? No,
Yeah.
what's that?
No. Shares outstanding is 190 million, but shares being traded on a given day average is 135,000.
No, so do the math. 150,000 shares trade in the stocks at 50 cents.
Yeah.
So that means that only $70,000 traded hands, right?
Yeah.
That's not a lot.
Yeah.
That means if you put $10,000 in a stock like that, you're putting 15% of the movement for the day.
For sure.
That's spectacularly huge.
Yeah, and it gets even better when you know hedge funds are behind this company.
But the problem with
Who
that
owns
is
like 30% of it.
if you want to get out,
Oh, we have a seat up here if you need a chair. We got 3 seats over here. I don't know why no one went over here.
the problem with this kind of a stock though, if you let's say you put $20,000 into this stock, if you ever want to get out, it's really hard. Because if you
I don't plan to get out.
20,000 back, you could be like half the volume for the day. Suddenly the stock goes down 15%, and you got fucked. I mean, like it's
Yeah.
So you just gotta. I would be cautious with anything like this where you could be the movement of the day. Which
So
is dangerous.
what do you think my time frame is on this?
Well, these are the kind of stocks if you buy, you better be willing to hold it for a long time.
At least a year.
Well, a
right?
year, but that means you're locked in for a year.
Which I'm fine with, because it's like the winnings I made from the other gold options I've been trading.
Right.
So this, like I said, this was a free finance position, right? I would say it's gold miner sponsored by another gold miner. Like at one point, so Bernard brought donuts in today.
Oh, yeah. Go
At
ahead.
one point, he was like, "These donuts are Carbon Black sponsored," and I kind of got the joke. It was pretty funny.
How do you interpret short ratio?
How did what?
How do you interpret short ratio?
How do I interpret short ratio in terms of like, I actually don't look at a short ratio unless I'm shorting, but that one I'm not too familiar with. Let's see, let's look at go to help desk over here and look at the short ratio.
By the way, on that last stock, by the way, you can also do a fun thing called a limit order and place an order at 20 cents.
Right.
And if it's greater than what the market makers have for the volume, some idiot might do a market sell, and you get it.
Yeah.
I mean, you'd be surprised that actually happens. I mean, that stock's at 50 cents, and the volume is really low. So if someone puts in a 10,000 share, they're not really careful, they're putting a 10,000 share market order, that means that they're willing to pay technically anything for the 10,000 shares. That could move the stock 5%. If you put a limit in the reverse, you could suddenly get a 5% gain. I mean, it happens all the time. Do you know what I mean? You guys know what I mean? I mean, so just be careful with a market order on any stock like that that's extremely low volume, because it can be
So that's why I'm saying I'm diving deeper into gold, because I'm doing micro-cap gold miner research.
Right.
To answer your question, how I interpret short ratio, it's the amount of shares that are short interest, so they're interested in shorting the shares, divided by average daily volume. So interpretation would be the higher it is, the more people are shorting it. If I recall that correctly, okay, I kind of just I don't remember all the ratios, so that's why we have the internet to help us out. But here, if you guys are kind of excited as to, there is the risk of moving the markets for something this small, right? But if we go to THM real quick, I'm sorry, TMH, and then we look at the current holdings. We're gonna do this later, but I'll show you right now. It's not even it's THM.
THM.
Yeah, not TMH. So we'll go to, let's see, who are the money managers holding this security? We go down, and we will see John Paulson right here, right? So if you expand it further, there's other sophisticated hedge funds out there like Techaville Asset Management, which has a significant position, but John Paulson has 30% position of this. So anyone know who John Paulson is? He's managing about 5.8 billion, but it's actually more than that, because this actually only shows what they have to report, right? The ones they don't have to report, they don't need to show the position. So what we have reported is about 5.88 billion of what needs to be reported. You look at his current portfolio. He's a hedge fund manager. He's in the movie Big Short. Well, he should have been in the movie Big Short, because he was one of the big players there that made more than $1 billion in that time frame. But he's just, I guess, wasn't featured in there. I think he's in the book though. If you go to his current portfolio, right? I personally like to do shares, but I mean, Bernard likes to go by value, so we could do value first. So before we dig deep into portfolio, let's look at the sector weightings, right? And kind of look at this. What do you guys notice? He's heavy on healthcare, right? And then after healthcare, it looks like consumer cyclical, and over here is basic materials. So he's extremely bullish on the healthcare segment, but I'm going to be looking at basic materials, right? So we'll go to his current portfolio. Now that we kind of know the weighting of the portfolio, I want to look by value, and his biggest value position in terms of 575 million in position size and 4 million shares is an ETF called GLD, gold. So his biggest value position investment thesis is he's bullish on gold, right? Now, if we flip it over to shares, not shares change, wrong button. Flip it over to shares, what do you see right here? THM, 59 million shares. That's not the biggest value position, but it's the biggest shares position, right? Yeah.
Wouldn't the value be a lot more important though? Because the shares is like saying, I'm going to spend 100,000 pennies at home, as opposed to like, 1,000, $100 bills, So the value of share,
Yeah, so the way I interpret it is it's a mix, it's situational, right? Because you could have let's say $1 billion position, one share, right? Or you could have 1 billion shares like Larry Ellison at Oracle, right? But 100 million in value. Or I'm sorry, it has to be more than that. It has to be like 50 billion in value. That guy's actually going up and down $1 billion a day. Just last trading day, I think he was down 100 million. 100 to 300 million, right?
But that's like saying I own 1,000 shares of a company, but I'm not telling you what the company is.
Yeah.
But if it's Berkshire Hathaway, I have a $100,000 share company, so I'm worth $1 billion, versus 100,000 shares of 50 cents.
Yeah.
So I mean, the number doesn't mean anything. It's the value that.
So the value said he's bullish on a security called GLD, which is gold,
Right.
and then the share said he's also bullish on a gold miner. So either way, he's bullish on gold, which we kind of can conclude, right?
Right.
I mean, this is, to me, in a way where if you look at the biggest value position, right? Some money managers will hold like Google, Facebook, Apple, but then they don't have a lot of upside because of the size. They might have upside if we start printing more money, but it's going to be limited compared to something like a THM that has high acquisition value, right? High acquisition risk.
Where the number of shares are important is when you compare it to the number of outstanding shares.
Yeah.
Because that can really move the market. Because now if
Right.
you think about THM,
Yeah.
and if you see the higher the short ratio, better it is. Because
Yeah.
then the short squeeze will be greater. Because you see
Yeah.
it can go from 550 cents to $10 in a day.
Right,
Yeah.
Right?
right.
So there is an advantage of actually number of shares. Because when you compare it to the number of outstanding shares.
Yeah, so we're jumping too deep into that microcap security, right? Because I mean, it's just like I'm financing my position from the winnings of the bigger cap, and now I'm allocating funds that are free to the microcap. So this is where I'm getting extra leverage, basically. But let's start the discussion today because we're already 20 minutes in. So again, guys, it's been 2 weeks. I miss you guys. You guys are welcome to use the restroom anytime, get some water and back, walk around. Feel free to leave anytime as well. This session is going to go 2 hours and probably 30 minutes. So we'll be out here by 12:30, maybe even 1 o'clock. I don't know, I'm just kidding. But yeah, technical discussion number 130. Well, before that, did I answer all the questions? Did I leave any loose ends or any comments you want to make about this week? Or if anything you want me to cover this week, I'll try to cover at the end. Okay. So technical discussion number 130. It's been a while. But this is how you train and put in the 10,000 hours, right? If you really want to achieve something. So my burning desire is to be a world-class investor, so I got to put in the hours. Number 130, market analysis. We're going to do the typical broader market analysis. It's been 2 weeks. We're going to look at the gold bull market. I think the gold bull market kind of just started. Maybe it's a little hyped up right now. Maybe it'll pull back a little bit and then reposition in. But that's a trade that I don't want to get away for me because there's a lot of meat on the trade. And then we're going to look at Kyle Bass's investment thesis report that he talks about Hong Kong. So you guys know who Kyle Bass is? He's a hedge fund man. Well, I don't know if he's managing more than $1 billion. Because I don't have the fully disclosed value, but he's one of those money managers out there that have a strong track record, strong reputation. He has a strong reputation, so he released his Hong Kong investment thesis, and we're going to take a look at that because I found it pretty valuable. I mean, if you guys are looking around the world, there's a serious Hong Kong protest and violence happening around the world. I'll show you a little bit. I don't want to get people scared or anything, but we'll look at some of the videos, I guess. And then we're going to look at VMware's acquisition of Pivotal and Carbon Black. So I'm kind of sad about that because Carbon Black got acquired for $26, but I was anticipating it to be $100, right? So I was trading at around $16, and now it's at $26 and bought out. And then they also acquired Pivotal, which is another multi-bagger that I was looking at. So these are beat down Kubernetes and cybersecurity companies. This kind of promoted the next research analysis that I did, which was FireEye. So FireEye is another beat down one that I could see easily acquired by Cisco or anyone that wants cybersecurity exposure. They're like almost on par with CrowdStrike. They do about 800 million in sales, which is a lot more than Carbon Black. So if you this is all for educational purposes only. If you consider FireEye, it could go down lower, right? But I'm looking at it now because of acquisition risk. If I don't look at it now, some bigger corporation is going to buy it out, and I'm going to miss that train. So I don't want the Carbon Black thing to happen to me again. Let's see. We got a comment right here real quick. Hey, Baroth. Nice to see you online. So before I like to start, I always like to start these sessions off with like a little motivational quote. I came up with my own quote this time around. So business is a business quote. Business is basically an organized group of people who working together to profit from an unorganized group of people called the markets. Isn't that kind of funny? Yeah. Right? We're gonna organize as a group, and then we're gonna go tackle the Apple Watch market for people who want to buy it, but they're not necessarily organized to protect themselves against it. So, damn, I think that was really bothering JC. So yeah, I found that extremely fascinating. Always go for donuts. Any comments on the quote? No comments?
2 thumbs up.
Sure. 2 thumbs up it is, all right.
I like it.
Yeah, it's, man, can we trademark that? Can I trademark that? I don't think so. Someone else is going to say it, but hey, at least you guys know I said it first, hopefully. And the other quote it's not really a quote, but I saw something on LinkedIn this week that was extremely interesting to me. And if you guys don't know, this guy is from Greylock. So Greylock's another world-class venture capital firm. You guys know I met one of the guys there, right? So Reid Hoffman, he's the guy who was the guy who spearheaded the investment to LinkedIn and all that. And he said something really interesting in the video. He said, Silicon Valley, approximately 4 million in population, half of the NASDAQ. Half of the NASDAQ. You see the power of human capital that flows around Silicon Valley? It's impressive. So I'm a strong believer that, we talked about previously how the greatest minds of the world, back in like maybe the 80s and 90s or whatever, early 90s, they traveled to Wall Street. They were financial minds. Now that's kind of shifting, and they're traveling over to the west side for the chase for data, I feel. So,
Yeah, but that is actually not right.
You don't think so?
Right. Because 4 million population, you're comparing it to people who are living in Silicon Valley, but let's say NASDAQ, let's say Google, right? But I think not all employees are based in Bay Area, right? If you see most of the employees are outside of Bay Area. If you compare the total population, I think that number. So probably I think what this person is trying to say is half the companies are from Bay Area.
Right. Half the companies, and let's say from the Bay Area, you're right, and that means these workers are working in half those companies on the NASDAQ.
Right, but not all of them are
Yeah.
here.
So
Silicon Valley is a super
watch the
interesting
video.
place, right? You got this maximum 4 million people, half of the NASDAQ.
Oh no, you went too soon. So point is, this area is great. I feel
Yeah, I think the
it
point
got
is
it got
that
me.
half of the companies are
Yeah.
from here.
Yeah. So let's say it's half of the companies are here. So you're right. Let's watch this 2-minute video if that's okay with you guys, and then we'll continue the conversation. I figure this stuff is interesting because we're in Silicon Valley.
So one of the things we realized is that Silicon Valley is a super interesting place, right? You got this maximum 4 million people, half of the NASDAQ. Why is that? And the story that people usually tell is the startup story. Like talented entrepreneurs move here, there's venture capitalists, tech universities, tech companies, and enough shots on goal, some of these big companies emerge. And what wasn't as clear was that actually, in fact, we've been learning this playbook, this set of rules, these strategies, these heuristics, these principles about how to scale really fast.
Yeah, and what we discovered when we started figuring out, okay, what goes into this playbook and where is it applied, is blitzscaling actually happens in other parts of the world, in other industries. And we just happen to have this phenomenal example here in Silicon Valley.
Because the key thing is, how do you really get speed? Because sometimes capturing that global market when you're the first there, that's the entire game.
So the definition of blitzscaling is the pursuit of rapid growth by prioritizing speed over efficiency in an environment of uncertainty. The reason you do this is you want to become the first company to achieve critical scale and build enduring market leadership.
All industries are being transformed by technology, and in specific, usually software technology. Blitzscaling is the pattern by which software technologies essentially help create the future at speed. And the reason why it matters is we think more and more of the world, as it becomes more and more connected, more and more kind of global competition, is what we call Glengarry Glen Ross markets. First prize, Cadillac. Second prize, steak knives. Third prize, you're fired. So first to scale really, really matters. And it's super important that this spreads. It spreads to existing corporations that learn how to reinvent themselves and be part of the future. And it's super important it spreads to other areas that also create great new companies of the future.
So I was thinking while we were watching this, it's half the companies on the NASDAQ are here. I haven't verified that, but that makes a lot more sense. So if it's half the companies here, a good chunk of the human capital are here. Right? And it's something that you guys won't notice because you're on the audience end. When you're on my end, you're producing content while you guys are consuming content. I've only noticed this. I mean, I didn't have any realization 6 months into teaching at this investment club, right? But after 6 months, I started to see something really interesting. Like, oh, well, you're from Intel, right? Oh, you went over to AMD next. That's SK, by the way. And then like, oh, you're from Dell, and oh, you're from NVIDIA. Oh, you're a data scientist from NVIDIA. Oh, you're from Apple. And I just realized, like, holy crap, like, there's some solid human capital, high thinking minds that are coming in here. So that's how, my burning desire number one is to be a world-class investor, right? This teaching here in Silicon Valley got me to my burning desire number two, which now I want to be like, really known in Silicon Valley for the tech, entrepreneurships, and startups and all that. So, hey, you never know. You just gotta go do something and you learn something one day. So that was a little motivational video, I hope, to share with you guys. And I do have some quotes here to, really, share other quotes, I guess. Advice from the richest right here. Mukesh Ambani, if I said that right. There is no overnight success and substitute for hard work. So it takes time and hard work. That's the truth, I feel. You asked me for what the secret is. People give the secret out every day. The secret's in front of you, but it's the time that you have to put in. You have to invest the time. So invest the time into learning investments, and you could become really good, in my opinion. This guy, always review your finances from time to time. For those of you who don't look at it, it's, in this investment club, we look at it every day. So this one, make emergency fund a priority, right? And Warren Buffett over here, rule number 1, never lose money. Rule number 2, never forget rule number 1. And then Jeff Bezos, in the end, we are our choices. Build yourself a great story. That's good stuff, right? And the more I've been thinking about it is, if you ever feel, I guess, not so motivated in life, right? I always think of it as very mathematical, where whatever you want out of life, you gotta put it into life, right? So the more you put into life, the more you get out of life. Yeah. The other mathematical thing that came up recently this week was, I don't know if I talked to you guys, but technology equals, tell me if this is correct, technology equals efficiency, productivity. Is that a fair statement? So doesn't that mean more technology equals more productivity, efficiency? Huh. Okay, so that's something I was thinking about this week as well. Mathematics to me is truth. If you ever feel like someone's trying to rip you off, just try to assess the mathematics of the situation, right? Whether you're doing deals or you're going out there buying something. I have friends who like to buy milk tea and pay extra money for foam, I'd say, right? Because if you think about the formula for milk tea, it's the milk, the tea, and the boba pearls, right? And then some people are like, okay, they'll pay more for the milk, the tea, the boba, and then the foam. And they're paying like $2 extra. So mathematics is truth, in my opinion. But that's pretty much it for the motivational part that we kind of do every week. Any questions on that?
So, Kay, have you ever go to one of these timeshare pitches, which are usually a horrible deal?
I never, but yeah.
It's great. You can get like a hotel in Hawaii for like $250 a night. That's normally like $500 a night. You just have to listen to some idiot talk about why you should buy this thing for an hour and a half at $1 million. It's like a joke, right? All you got to do is put for $1.
Okay.
Put the HP 12C financial calculator on your iPhone.
Yeah.
And they instantly know that you understand math now, right? So when you go through the calculation, like you just calculate, like, I don't really see the value. So for $1, that hour and a half conversation will be cut down to about 15 minutes. So just bet the dollar you saved an hour.
Sure. Why not? Thanks for the advice.
Absolutely.
So guys, let's jump into the market update. How I feel about the market, my expectations for the bigger global macro markets, and how to trade it. Right. Market expectations. September is here. So you guys know, August, before all that, I backed off from the short the market type of trade, long volatility trade. And I said, let's wait until September, October, which are like the typical months where markets get really volatile. So September's tomorrow, Monday, right? But really Tuesday when the markets are open. So yeah, I'm getting more, bearish at a macro level, right? Locally, I'm bullish. Silicon Valley's bullish. Though I am seeing more homeless people, but that's okay. That could be a sign of success too, right? Because if you think about the asymmetry of a situation, the more homeless people you see, then there's going to be more rich people on the other end. That's just the economics of it. But okay, well, you found that funny, all right. Yeah. I mean, if you're complaining about homeless people, then you gotta think you gotta complain about rich people too. Sure. So like artificial intervention, right? So would you say there's even more or even less because of our intervention?
Well, it changes. So what you see may not necessarily be just the market.
True. So I mean, it could be a wrong bias. It's not a very objective analysis, but going back to the comment I made earlier, I am starting to see more homeless people in the Bay Area and in places that I've never ran into them before. I anticipate more volatility in the coming months unless we make new highs. That's really the main thing. I think there's a possibility of another market correction similar to November, December 2018. So let's take a look, right? So if I were to forecast out where the performance is going to be, This is not my forecast. This is actually from one of the data feeds that I subscribe to. I pay about $1,300 a year for this, Guru Focus. This is the most recent projected annualized market return. So you look at Singapore on the developed market side. So on the left side is developed markets, on the right side is emerging markets. I'll draw real quick for you guys. So on the left side right here, this is the developed markets, and right here is the EM, emerging markets. So they anticipate EM like China going to be really outperforming at 30%. Right, so I am in agreement with that, but not initially. And we were talking about how the main issue is that if there's global fear, people run to the dollar. Right, right now, Hong Kong dollars are trying to be transferred into U.S. dollars because of the whole protest and stuff. I mean, I'm not saying that's the main thing that's causing the dollar to go up. There's global fear, so a higher dollar is bad for emerging markets. So I am bullish on emerging markets, but it's a trade that you just have to wait for now. So timing's not there, but it looks like there's substantial return opportunities in China, Russia, India, Indonesia, Brazil, and Mexico. Right? That's where I feel are the upside. So going with Trump's tweet, we'll skip ahead a little bit down here. You guys follow, I think modern communication is also evolving, right? It's not really just television and radio anymore. It's also evolving into social media type of communications channels. Just think about how information is being distributed, really. But you look at Trump's tweets. Here's an example that we posted in the group chat this week. So it's several tweets, but we don't need China, and frankly, would be far better off without them. Our great American companies are hereby ordered to immediately start looking for an alternative to China, including bringing your companies home and making your products in the USA. Right? I can see how that would stimulate economic growth, but price-wise, it's going to hurt stocks because where's the margin? Right? We are developed market labor. We're not emerging market labor. Right? You get what I'm saying? So margins are thicker for emerging market labor. If you send it over here, the numbers wouldn't make sense. So stocks would get hurt. He'd be damaging stocks by asking that. I mean, just from observing the economics. But if you ask me, the winners of this tweet will definitely be Southeast Asia and maybe India as well, right? So the trade tariff or deal might not go through, but he's verbally he's in a position of authority and power, right? So he's threatening the corporations. So I think the way corporations are going to adjust, seeing this volatility. I spoke with someone at Apple recently as well. She works in the finance operations division, and she said how it seems to be pretty substantial. This is Silicon Valley, right? So I see the economics trickle the other direction, and it's going to go to other countries like Vietnam, Indonesia, maybe Thailand and all that, India as well. So again, it's reinforcing our emerging market trade, right? Buying emerging markets as well is also like buying gold. Can anyone, besides the people I told earlier, have you thought about why it's like buying gold? Whoa, what's going on here?
Fire scan.
Oh, that's not me. That's hold on. That's Ed over here hacking the system. I'm kidding. Yeah, it's not me. It's like a computer. So I'm streaming this from another computer.
Oh, it's a server.
Oh, whoa. Sorry. Okay, I think we're good. Okay. So there's actually another PC behind this TV right here. What? Yeah, so what was I saying? So if you think about it, I'm bullish on emerging markets, right? Emerging markets is almost like buying gold. Because if you think about, okay, there's substantial volatility around the world, and they're going to devalue the dollar, right? So it's not just big developed market sovereigns like Europe, Japan, and USA buying gold, but also developed markets, emerging markets like, let's say Vietnam or Russia, they're buying gold too. So if you buy emerging markets, if you buy Russia today, aren't you buying gold? Not a fully pure gold play, but it's a diluted gold play. So that's where I see upside, because you're buying the ETF or country that's buying gold. And to me, that's like you're almost buying gold. But you're also, if you think about Russia, right? If Russia has substantial upside and they're buying gold, so you're gonna be banking from the tailwind from gold, also from the tailwind from being emerging markets, cheap labor, the economics of the world's gonna be dumped over there, right? So when I think about it, going back to his tweet right here, I think corporations, multinational corporations in the U.S. are going to start building out supply chains around the world, and that's infrastructure money, right? So these multinationals are going to be like, all right, well, if he's going to be this crazy on Twitter, we're going to have to start deploying infrastructure money into countries like Vietnam and make Vietnam win by default, which is kind of crazy. Right, so I was like, oh, that's 1 point for the Vietnamese people.
So by the way, so all these tariffs kick in on Monday or Tuesday, right?
I'm not following the exact dates and all that. I'm more of a market participant.
So, well, let's say now, so basically that means that there's a possibility, you'll hear a lot of negative sentiment by US companies in both directions next week.
Yeah.
So it'll be interesting to see which companies are absolutely gonna say this is gonna hurt our business or gonna hurt the country or whatever it is, but just expect a lot of noise about what this means, which could influence if China and or the US do anything about it.
And also Trump tweeted that all these weak companies are using an excuse of the trade because they're weak with their corporate, and then the strong company's not gonna use that excuse. Doesn't tweet it.
So the best way to really understand this is to be a business owner yourself. You know, you're an international business owner, and he's hurting your supply chain, and you want smooth cash flow. He's making your cash flow go very volatile. It's like, oh shoot, next month we're not gonna make as much money, but I just bought this and then blah blah blah. I just invested. Well, they wouldn't complain about buying a new home because it's a lot bigger money. They complain about I just invested money into this project in China. That kind of just went bust. So I think for sure they're gonna. I mean, just think about that power for a second. Someone's verbal comment, digitally augmented through social media channels, are disrupting trillions of dollars of supply chain, making other countries win by default. Man, that's the world we live in today. More technology equals more productivity, efficiency. Advanced technology equals advanced productivity and efficiency. Mathematics is true. So anyways, USA performance.
And much faster speed.
Yeah. It's
So, none of this China tariffs apply to Taiwan?
where's Taiwan on here?
I don't know if it's considered separate, a business.
That's true. It's probably not affecting Taiwan.
Yeah.
That should gain the maximum benefit out of.
So there are. I mean, we're gonna look at Hong Kong today.
Singapore's on there. Singapore.
Yeah, Singapore's on here. So Singapore, I anticipate to do even better because Hong Kong's a financial hub, right? It's like top 5 in the world, if I forget. Top 10 to be safe. Singapore's up there as well. They're gonna spearhead Singapore above Hong Kong now because of the situation in China. The issue really is that this whole 100-year. We'll get into it. It's just basically China wants control of Hong Kong in a way where they could police it better and go by Chinese law, which the Hong Kong people don't like. We'll look at it. And there's an investment thesis around that as well. Any comments on the projected annualized market return?
So, is it a yearly or the monthly?
Annual, so 1 year.
So the USA is a negative side, so the market is already 10 to 15% high, so they
Yeah.
expect the remaining month would be going
Yeah.
that much down.
Yeah, so you're right. So if we look at by the end of the year, if we're up 10%, whatever, it's gonna go back to like right about neutral. That's pretty in line with my investment analysis as well. That's why I say September, get ready, right? So if you're heavy on positions, now this is all for educational purposes only. I don't guarantee that anyone in here makes the money. It's the education, right? It's called a club, not a institution. Volatility institution. That'd be funny.
Quick question, if this graph shows the United States is going down, let's assume that.
I'm sorry, which is going down?
USA,
Yeah.
and I'm assuming USA mostly buys from developing markets, imports more.
I have to look at those numbers. I can't. I don't want to give you something false.
Well, the United States is net importer.
Right. Okay.
So if net importer goes down, it stops buying.
Right.
So if you stop buying, like, I don't have my new car. If you were selling the car,
Right.
I don't have my salary.
Right.
So the one who is selling is impacted more.
Right.
So why is emerging markets going up so much more?
Emerging market. I would assume from this is. I mean, we could go all day with this, right? One is like, for example, India. You look at the demographics of India. It's the bigger working class is actually like millennial age, right? And they're not in debt. They're most fit. Over here, the demographic profile, we're older baby boomers. They need to retire. They need to exit their equity positions, or basically exit their 401ks or go to cash. That could be one reason, right? Where just the economics over there is stronger. Like so, there's going back to the India. That means if they're young, they're working professionals. They can leverage up, buy a home, buy insurance, financial services, whatever. They'll consume a lot more. So that might be one of the plays. The other one, from a more sovereign perspective, global macro perspective, would be a devaluation of the dollar, right? Because if we have a global recession, we're gonna devalue the dollar, and that's gonna be really good for emerging markets. So that could be another factor, right? Because what you asked is a very global macro question that it's not an easy answer. You gotta consider like many variables. So, but that's the projected economics of, like, let's say, I wouldn't say the next year, maybe the next 5 years. But I'm definitely positioning it that way. So I'm gonna get winnings from gold, let's say, and take those winnings, shuffle it into micro cap gold miners, take the extra winnings and shuffle it into emerging markets, and then also shuffle it into multi-bagger stocks like Carbon Black. Yeah. So we'll look at those segments today. And I'm gonna stay away from momentum I'll play momentum, but it's just really hard to play growth momentum right now. Because if there's volatility in the markets, it's just, you want to play Salesforce, you should look at the Salesforce chart. In the past year, this is Salesforce right here, right? In the past, go to advanced right here. Look at this, right? Very choppy, right? Versus something like momentum that I normally play is like Coupa, right? Very easy and just kind of going up. But a lot of them are getting hit. But if you go to the weekly, very easy play.
So we could look at Coupa for a minute, because they do have their earnings coming out on
Sure.
Tuesday.
So the other thing is you can never predict earnings.
No, I just look at signs of
Try to
strength.
try to front run your question.
No, it's just a company that's likely to continue to either grow in sales or earnings.
Yeah, so if you ask me to do a quick analysis of Coupa, so I like Coupa. They're here located in San Mateo. They're actually known as the next Salesforce, they say. But they are, if you look at the valuations today, they're kind of pretty overvalued. Looking at the price of sales is at 30 times. This market right now is willing to pay anywhere from 10 to 15x, right? So it's about double the mergers and acquisition valuation. But that's okay, because this is public markets. They tend to just stay like that. Public markets, you give a little bit more leg room, in my opinion. Looking at the price of book, there's no book value. Well, I mean, there is, but it's just overvalued massively. And it's only making 260 million in sales, right? FireEye making 800 million in sales, trading at 3 billion versus this one 8 billion. So FireEye, from a valuation and mergers and acquisition perspective, is a lot more attractive. So we're gonna do a deep analysis on FireEye today, because after the series of acquisition with Pivotal and Carbon Black, it got me a little insecure. Because Carbon Black got bought out for $26, man. This thing was supposed to go to $100. I know it's gonna go to $100, but they took that away from us as public investors. They took it private. Well, I'm sorry, they took it to another public game called VMware. So you gotta buy VMware now, which is okay, but I didn't have the leverage I would have had with Carbon Black, right? So now if I want to buy Carbon Black, I have to buy VMware, but I'm buying VMware options, which I could have been buying Carbon Black options, which is way more leverage and giving me way more money than the other one. So that's the situation, right? You play long enough and you just kind of know how you have to adjust and play the game. So I can't size as hard as I can with VMware compared to Carbon Black at a price of $16. Coupa Software, so that's my take on it. I like the sales growth momentum right here. Typically in SaaS, that's the key, the KPI that we're looking for. Basically the difference right here. The bigger the difference, the more parabolic the stock goes. So this one could go a lot higher, in my opinion. It's only $8 billion. I think this one could easily go to $300. But the only issue right now is that in a recession, it'll wipe it out. It'll wipe it down, way below 90 in a recession. Right. So that's why I'm kind of like, all right, I think gold's a little bit more safer. But I naturally speaking, in a regular environment, I'm a software investor. I prefer to be a software investor. So this would be my go-to play, right? We analyze the venture capital and all that too. This is world-class VC funded and stuff like that. So I like them, but I'll tell you this: no one could ever predict earnings. I haven't seen anyone. Maybe. I mean, not 100%, but I've seen some guys on Twitter who do it like pretty 75%, which is not bad. Okay, so let's see. That's the projected annualized market return, guys. Let's look at the S&P 500. We'll go through this part kind of quick because I want to talk about Hong Kong and all that today. But if you want me to go a little bit more into detail, feel free to ask as well. So S&P 500 ETF right here. So what I'm looking at is break of the trend line right there. Simple. I keep it simple. Break of the trend line. Now testing the 50 moving average on Friday, but it rejected that. So that to me looks bearish, right? And we have an objective close on Friday. So I always just look at the daily, right? I'm not trying to, if I'm day trading, then I'll look at the 15 minutes or the hourly or whatever, but I'm not day trading this. I'm using this to kind of just analyze the heart of the economy and how the economy is doing. So I like to look at the different, four corners of the heart, I'd say, or the economy. S&P 500 is one of them, so that's why I see for this one. We're still above the 200-day moving average, so if we go below 280, it's going to get real bearish, which I think could be potential in September, October. Let's see how we perform this coming week, and maybe in the next 2 weeks. If it goes below 290, I'm going to get more bearish. If it remains in this range, I don't think it will. I think it will actually go maybe lower, but we'll see. If it bounces above the blue line, the 100, the 290, and go above, then I'm going to start getting bullish again, right? But that's the thesis right now. But as for gold, I'm just bullish already. That's how I feel about it. So that's the so you were talking about percentages, right? Check out these percentages right here. S&P 500 right here. Down 11%, up 10%, down 9%, up 15%, 10%, 8%, 7%, 17%, 25 up percent, -7, +10, -7. So as a portfolio manager, I mean, from a consumer retail trader, you're like, that's a good amount of volatility. I could trade that. But from an institutional perspective, it's going to get really, they're getting uncomfortable. If I was a big time money manager managing more than $1 billion, I wouldn't feel comfortable with this. Because I have to spend a lot more on premium to protect my positions. I have to spend a lot more on insurance, right? So it's been going on for a while now, since 2018, right? So we already went 1 year, and then more than a year and a half. So I remember in 2015, we had about a year of volatility. This is more than 2015 now. So markets are getting heavy. It looks heavy. I feel it's heavy. And that's how it's kind of...
Yeah, the index is SPS.
heavy as in it's just the markets hasn't been going higher. If it's not going higher, then where are we going? Sideways, right? Sideways or down. There's only 3 directions. But just kind of be aware that this is a great trading environment, but from a mutual fund manager perspective, it's very scary and getting very heavy, and they're not happy with their end of year bonuses, to say. Right? Any comments, or we'll go to the next one. So that was S&P 500. We'll look at NASDAQ real quick. So this is what I see for NASDAQ. This one is, again, rejecting the 50-day moving average, which is my orange line. Again, I look at the moving averages that every money manager looks at. Nothing like out of the norm. It's just very standard stuff. Trading below 190. If we go above 190, then I'll get a little bit more bullish. But for now, it's stuck between the 50-day moving average and the 100-day moving average. I'm expecting maybe lower. Maybe a test of the pink line at the 180 level. So that's the NASDAQ, right? We're trying to look at all the corners to make sure this is what the markets are really telling us. This one, same thing. Look, you kind of see the pattern now, I guess. But below the 50-day moving average, above the 100-day moving average. This is the Dow Jones. So that's the other corner. We're going a little quick here. Looking at Russell 2000. Russell 2000. This one's the most bearish one. This one's below the 200-day moving average. It was looking pretty bearish this week, but I guess we rallied a little bit. But still below. We'll see how it tests at the pink line. So that's all I'm watching. Very patient. You can't force the world economy, right? I'm looking at a pace that, let's see what markets want to do. At this point, if you ask me we're going up or down, I still don't clearly know. I need more data points. I need more time. But in the meantime, I can tell you where other asset classes are going, like gold. Gold, I feel a lot more confirmed that we're going to the upside, considering the fundamental economic dynamics of the world. But for equities just, if we start printing more money, I think it could go higher. Right? That's the crazy part. And I think we will print more money. So this might hit real estate prices. I think real estate prices might sustain, maybe, from a national level. From a strong pocket level, like Silicon Valley, I think it will sustain, which is kind of crazy as well. But it's just going to make living a lot harder. And so you're going to have to work a lot harder. Remember, technology equals efficiency. So advanced technology equals advanced efficiency. So don't work just harder. Work harder with technology. So that's Russell 2000, guys. The small caps. The small caps are actually getting hurt the most, and they typically get hurt with higher interest rates. But now we have lower interest rates, and they're still kind of down. So we'll continue to monitor. This was the worst performer in terms of the indices back in November, December. So that looked really scary. I still need to practice myself on buying B bottoms. You know, I kind of, at this point in my trading, I kind of know when I see a V bottom's coming, but the instincts to execute wise is not there. So when JC was asking me earlier today, like, do I use like indicators and all that? No, I don't use it because I'm focusing purely on price and myself to execute a position. Because most of the money's made in execution, right? You could draw like hundreds of lines and all that, but it's the execution that gets you the money.
What gave you the indication that there was a V bottom
Uh,
in 2019 December?
Yeah, so you can look at all four indices, and all four indices are kind of reverting, but the initial high volume down, and then some high volume spike right here, and it just looked really extended with the Bollinger Band all the way pierced out here. So it's just, if you guys know, markets don't go straight up. They cycle up and cycle down. So if you see this, I don't know it's going to be a V bottom, but I know there's going to be a bounce from a trader perspective, right? I didn't know it was going to be a 20% bounce. That's the issue. That would have been a nice amount of money if you played that. So did that kind of answer your question? Like, it's just gut feel, instincts, experience, right? You come in here for the education, right? But I can't give you the experience. Unless you consider it experience. But you got to go and trade and participate in markets to get that experience component. So it's education or knowledge plus experience equals really robust trading personality or efforts. Yeah.
To me, the confusing thing about it is sometimes when the stock has gone down a lot,
Yeah.
that's a signal, it's a bearish signal that it may go down further.
Yeah.
Other times, if it goes down, it seems like that's a bargain deal now, and it's time to get back in, and there will be some kind of bounce. So
Yeah.
it seems like the threshold for one and the other are there's a very fine line there, so you don't know which side of the threshold you're on when you're making the trade.
And the key to this is never try to pick a bottom or a top.
Exactly.
What happens is in this when I was trading during this time frame, I never tried to pick a bottom, but what I did is I was actually waiting for it to bounce back, and you see there was a consolidation.
Yeah,
on the right side,
I wouldn't get the bottom. I'd probably get it like after.
right?
Yeah.
That is where I got in, is because then I see that the market is consolidating, it's probably up, and I knew macroeconomically why it was going up was because of Jerome Powell's comment at that time,
Right.
and I knew I didn't know it was going to go that high, but
So,
it was going up.
so Kate, that part where the stock goes up from
December?
January up
Yeah.
to March,
Yeah.
that's sort of like looking at the answer key to an exam, okay? When that red line goes down,
Yeah.
there's no possible way you can know in January where that bottom is if it's gonna keep going down. It's totally impossible, and everyone on TV can say all they want, but no one ever knows.
Yeah. No one knows. No one
But
knows.
generally speaking, the companies that are these shitty companies that are highly overvalued are
Right.
the ones that people fear are gonna totally implode, that people get rid of.
Yeah.
But the ones like the McDonald's and the Microsofts, they all tank
Yep.
at the same
Yep.
time. And those are the ones that rebound because the fundamentals of the companies are strong. So if you balance out with a reasonable number of strong companies, like that graph shows, it doesn't really matter. If it went down 15, then back up 15, you're still where you were. You could have guessed
Yeah.
that it was gonna tank, and you could have guessed that it was gonna go up, but you can never know.
Yeah, you just never know. To answer your question, stocks and an index are completely different. What you think over here, like your typical standard technical analysis, doesn't work on an index. It works on a stock. The index has been the hardest thing for me to predict. I could predict it maybe intraday, but I still have issues because there's so many players, so many participants from a global level, right? So I have to really escalate it to a global macro thinking to kind of understand. And why do I like global macro? You guys understand when I say global macro at this point? Right? Global macro is basically the games of the sovereign. Because if you think like a sovereign, right? I'm called the enterprise guy. I don't like to go to the sovereign level, but if you think like a sovereign, they don't think in terms of money. They print money. Why do they need to think about how much money they got? Right? They're more concerned about, are you using the money, right, to place trades? That's what they're more concerned about. They're more concerned about human resources and capital. How advanced is the human labor here, right? And are we going to take more immigrants or whatever? They're concerned about resources and national security, right? If Russia corners the uranium processing market, well, we need nuclear energy. We're going to pay them money. This is a national security, so we need to put tax dollars to that. So uranium is a great trade, but just not yet, right? So you have to kind of think like a sovereign, and I think I've been better at practicing putting myself in other people's shoes, Not that I have like a VR headset and I'm like, I'm gonna be in the shoes of SK over here at AMD. but yeah, it's just over time you I guess you mature a little bit and you just kind of think of like, okay, what's the other side look like? Because everything's a trade. Because most of the time when you guys go to the movies, you're 100%, 90 to 100% for the movie. I'm gonna watch the Avengers, right? But these days when I go to the movies, I'm thinking about like, oh, these guys are producing a movie. It's like one of the few, right? When people, I don't watch sports, but when people watch sports, there's an extreme amount of symmetry there because so many people are watching just a few group of people, and that's how you really get rich, right? How do you get rich? Or in my opinion, how do you get really wealthy on a situation? Just find overcrowded situations and think about how to play that. If everyone's on Facebook, and I use this example, depression trend is going up, maybe psychology services, right? If overcrowded in this example would be everyone has an iPhone, I'll build an application on the iPhone, right? So everyone's calling themselves a real estate agent. I'm calling myself the enterprise guy, right? Because I think about aggregate. So there's real estate, right? There's physical real estate, which is like you own the corner of that property in that neighborhood, no one else, right? Then there's digital real estate where I was trying to buy EnterpriseSoftware.com. The broker comes back to me saying 5K is not enough. Well, how much, man? 125K, right? So that's digital real estate. But then there's also social mental real estate, right? Who do you think of when you think of a realtor? Who do you think of when you think of a dentist? Everyone has that person, right there, right? But I know that not many people are playing like the enterprise startup world. But that's a significant market. So how you name and brand your company, this goes into like business strategy if you were start doing business, right? Naming yourself in a way really helps. It reduces a lot of marketing costs, I feel. Something like a Lyft, right? L-Y-F-T, everyone knows the word. It's a pink mustache. It stands out, and I can use it in everyday language. Hey, just Lyft that. Hey, just Uber that. Or I'll take a Lyft. I'll take an Uber, right? That's how you really, you want good business, I feel. So going back to this, so Russell 2000, any comments? It's below the 200-day moving average. 1 out of 4 of the indices are looking pretty bearish. I was going to draw how I feel about this, like how charts tend to move. Like when I watch long enough, whenever I see something like this, like it just kind of fell off a cliff, right? Sorry, it's a new laptop, so okay, all right. There's always going to be a bounce. Right? And I measure the bounce and see where it wants to go next. So there's always a measurement that you can measure regularly. The percentage of the bounce.
So the Fibonacci retracement doesn't apply to indexes?
Yeah.
It does?
I apply it. Whenever there's a huge dip, right? If it retraces, that's 50%, then I don't know. If it retraces more than 50%, then maybe it wants to retrace 100%. But if it retraces like less than 50%, then I think it wants to go down. So that's kind of how I play it from a discretion point. They say there's a lot of algorithms, robots in the markets today, right? That's true, but I don't see any difficulty or changes. Like it just, it's still. I mean, if you understand mergers and acquisition, buying out a company, robots don't mean anything. It's not even competition because you're buying out the entire thing, right? So yeah, always follow. One thing that I've learned late in investing that I feel like I wish I'd learned sooner, right, is follow the credible people with reputation.
Absolutely.
Because where they decide to invest, it's just like an automatic win. Because people in here, right, or not just in here, 90% in the world are chasing money. You want cash flow, but you don't understand cash flow comes from deal flow, and deal flow comes from people flow, right? So when you apply that to investments, if you apply that to business, then okay, mathematically speaking, if I meet more people, I get more business, right? But from an investment perspective, if I meet the right people who always invest, well and follow them, then I just, should be a better investor. So I've seen money managers who was it the Lux Capital made put 300 million. Sold it for $6 billion to another corporation. That's pretty nice, right? From just following a thought leader. Someone from Intuitive Surgical, I think the founder, left and started a startup. This guy created another $1 billion company, right? So the reason why I like the startup realm, because I understand that there's like different business making opportunities out there, right? Cash flow making opportunities out there. if you think realistically as a real estate agent, have you ever heard of a billionaire real estate agent? Billionaire realtor, I'd probably laugh. I'm like, damn, you put in a lot of sweat equity. Because it's not humanly scalable, it's a service, right? So the real 100 million strategy, in my opinion, is actually to do a software startup in a very short period of time. So that's why I'm really eyeing this market segment. And I'm not really hustling consumers, let's say, average people. I'm trying to hustle enterprises, because that's where the big money's at, right? So I think once you mature, you see all that, you get pretty pumped up and excited about it. So let's go on to the next part. So practicing a little bit of wave theory. I'm not a wave theorist, but I always leverage this guy's blog. Again, I'm using the technique of following someone that's credible, right? But he passed away in the last year or so. But his blog is still running, and by his daughter now. So I still leverage his work. It still works for me today. Tony Caldero. I don't know who asked that, but Tony Caldero. So his daughter's running the blog now. So the day that he died, so many people around the world was like, hey, best wishes from Joe from Brazil, but probably not named Joe. But yeah, it was kind of sad, but the blog goes on. So I still look at the blog for Elliott Wave Theory. That's a powerful practice that I see money managers using. I admit I haven't been a good student to learn it myself, but I try, right? Not hard enough like I do on the other things. Long term, what do they see for the S&P 500? They see that the uptrend may be weakening. I take this blog very seriously. And then if you go down, in the medium term, they see downtrend. And usually when they call these, they never call a downturn. They did, and it actually went down the last time I checked in November, December. But they're seeing weakness. So I see weakness as well, just to kind of confirm my discretion. So that's where we're at. Just giving you guys another form of analysis, which is wave theory. So let me know if you have any comments. And then we'll look at the other markets, okay? We'll look at Europe and the other developed markets. Looking over at Europe, this is what I'm seeing for Europe. We do have a bounce right here, 200-day moving average. It looks like it could be going up and setting up a right shoulder right there, which would complete a bearish head and shoulders pattern for further downside. Listening to money managers, they say Europe is fundamentally poor, not in infrastructure, but just the fundamentals aren't that great. So this is what the charts look like. So this is like their S&P 500. We're just looking at Europe now, right? We want a global view of things. Going over to Stocks 50, we'll look down at the DAX. This is what we normally practice. Again, the DAX is bouncing off the 200-day moving average as well, with solid support at 11,400. So again, maybe we'll go back up and set a right shoulder right there to complete a bearish head and shoulders, but we'll see. Like I said, these things don't drop like that. They always retrace, and it's up to you if you have the instincts and confidence to place a trade on a falling knife. God! But that's the DAX right there, guys. Going over to Japan, right? Looking at the other developed markets. This one's looking pretty bearish. I mean, this didn't act as resistance because prior supports becomes resistance. I see it kind of acting as resistance, but a little high. This specific resistance right here, but it is in a confirmed downtrend. So what we want to see next is how it responds at the 200-day moving average, as well as this objective trend line we drew. So Japan's in a slight downtrend, but not 100% confirmed yet, right? So you guys heard it, okay? S&P 500, NASDAQ, Dow Jones looking okay, a little weak. Russell 2000 looking weak. Global markets kind of recovering, bouncing, but we can't confirm it's an uptrend. Japan's pointing down. Wave theory says weakening. Medium term is downtrend. So I think September, October is setting up to be like any other September, October, right? Because it's a cyclical thing. So I'd say my take, educational perspective only. I'm not telling people to liquidate their accounts, but just get protective in the coming weeks. Looking over at emerging markets, so I leverage an ETF called EEM. So this is the one I'm bullish on, right? But the timing needs to be right. The timing's not now at all. I feel like it could probably go down further. But objectively, so I like it when a computer draws my technical analysis because it's a lot more objective than if I were to draw it myself, because I might have human bias in it. But we see an objective left shoulder, head, and right shoulder. So they see head and shoulders, and how much further down? Who knows? Maybe $30. So, but that's okay because I'm going to be bullish on this one in the next super cycle, right? The way I'm going to play this one is not only look at the technicals, but I want to look at the, what's the word on the dollar devaluation, right? I want to listen to central banks because this is a global macro play. This is not like, oh, I think the stock is going up. This is like, you have to have a framework thinking of the world and how you place a trade with that. That's how I feel. Looking at the Shanghai index, again, it's just another angle of emerging markets, not just like consolidated emerging markets, but Shanghai, holding the 200-day moving average, but still in a downtrend. So we'll see how it responds around this. It's going to tighten up and maybe go lower, let's say, or go higher. We don't know. But it's sideways to down right now for Shanghai. Let me know if you have any comments. And then China large cap. So I'm bullish on this one as well, but not yet. And again, we've got the technical objective, left shoulder, head, and right shoulder, right? So FXI is probably going to be one that I'm going to be leveraging options on the way up in the next super cycle. What is it? Because if you go back up and we look at China, right? China is supposed to be the outperformer over here, right here. So I'm looking at FXI as the large cap, the A shares, the best of China, right? So it's like buying the Google and Apple of China. If they're beaten down, I'm going to play FXI. So I'm going to look at options on FXI, like leaps and stuff, but not right now. It's in a downtrend. So, but it's nice to build up a pipeline of opportunities, you know, to kind of smooth out your earnings if you think about it. Looking over at India. So India is an opportunity as well. Another angle in emerging markets, just like Vietnam. India is important again because of demographics. I think you know, looking at the population age, it's not like baby boomers overloaded with debt. It's younger professionals who don't have a lot of debt, and a lot of services are going there. It reminds me of the picture of someone in here who sent the picture of IKEA, the IKEA line in India. Was that you? I think it was you, man.
Yeah, that was the first store opening in Hyderabad.
Yeah, and it's just like, it wasn't even like a road. Like, you know how like, if I show you like a, let's say like ramen place, right? Like, oh, hey, yo, check out this line, right? This one was like a highway. So that was actually pretty interesting to show like, you know, their desire to consume like a middle class or something like that, right? So that's how I kind of think about it. I think there's substantial opportunity, things that you don't want to let go, I feel, in the next cycle, but just not right now because of the dollar. The main thing that's holding back from all this upside potential is the dollar. So that's what I'm watching. What's the? That sounds like a triple leverage. AMDL.
No, INDL. It's also an India ETF, but I don't know.
So something you have to learn about ETFs is that there's multiple vendors who could supply that instrument, right? So it could be so you said INDL. Yeah, so this is direction. It's a leverage, it's triple leverage. So if you want more velocity, you'll get it with this one. But keep in mind, these are securities that decay over time, right? And they're meant to strictly be traded, in my opinion.
It's kind of sparse, the volume.
Yeah, that's because not a lot of people know about it, right? The reason why it's sparse is because the activity. If there's more volume, more people, more participants, then it starts smoothing out, right? This would be like the equivalent of, the other chart would be like the equivalent of like a real estate transaction where, you know, when you got someone on a property, it's not that many people transacting, it's pretty sparse over time if you track the prices. But you add a line to kind of smooth it out for your own personal benefit, human benefit. So India, I like. Vietnam, we talked about earlier today. So with the Trump tweet, move your companies out of China, move it back home. But if they don't want to do it back home because it's going to hurt margins, then Vietnam to me seems pretty bullish. I like the thesis that's developing, but I'm not ready to pile money into a trade for this one. I feel this one, yeah, I think the economics make sense because if you think from a map perspective, their infrastructure proximity is good, right? When you analyze miners, they talk a lot about infrastructure proximity. The closer you are to, let's say you have this miner ore body, you have this mine, right? And you found another mine that's close in proximity, you benefit because you already got existing industrial operations there. So I think Vietnam is relatively close to where China is compared to, let's say, India, but I don't know. Apple's got the money to deploy infrastructure money everywhere in the world.
How big is the domestic consumption market?
How big is the population?
Or, yeah.
I don't know the population. I should know this stuff, right? I think 70 million. Hold on, now I want to know the population of my people. Let's see, Vietnam population. When we look at a population, we also, so not 70 million, it's 95 million. Was it 70 million when I looked at it last? Okay, I might have looked at it back then, but yeah, 95 million Vietnamese people, right? Not as frequent as me bumping into Chinese people or Indian people, but yeah, yeah. I meet a lot of those two people these days, I feel.
I'm thinking also the rationale because once the companies move to China, there's a lot of consumption. As you said, the cost of shipping is lower. The local market itself is huge.
Mhm.
Same way for India. But if they're manufacturing in Vietnam, still have to go
Yeah.
India or other parts of the world.
Yeah, yeah. Real quick, let's look at the maps and just kind of guesstimate this infrastructure deployment, right? Someone had a comment. Vic said, how accurate have those projects analyzed? That's a good question. I'm not sure on that one, Vic.
What was the question?
He asked, like, how accurate is the annualized return on Guru Focus? Considering the amount of money they make from their tool and the amount of money I pay, I would say it's pretty accurate. I haven't been tracking it in terms of accuracy. I use it, like, I'll look at a data point, right? But I'm not going to take it seriously. I'm just going to say, okay, so this group feels like it's going to go up 30%. Then I'm going to play and have my own risk parameters for this security, emerging markets, I'm going to play with my own discretion is what I'm saying. So I'm answering someone's question online. It's kind of weird. I'm looking at SK.
Years,
And just 1 year out. But if you ask me personally,
sounds like, many years of.
yeah. So if you ask me, so I'm thinking from what I'm reading, it's 1 year. But if you ask me, I think it's several years out. Yeah, it's several years out makes a lot more sense because the emerging market play is not ready right now for me. I would estimate a year out, a year or two out, because we need to go through. The game needs to reset, right? And why do I say the game needs to reset? This is my own discretion or my own thesis, analysis, opinion of it, and you guys could have your own as well. But I personally believe at this point that the game has to reset. If you think about it, from a sovereign perspective, right? If the game doesn't reset, then you're going to have unhappy people who can't afford to play the game, right? And for those ultra high net worth individuals who cornered the assets of the world, what would they want? I could buy I have all the money in the world. I just want to sustain my position. So we need to get these people to keep consuming, keep playing the game, right? Keep chasing we need the 90% to keep, chasing the efforts for the corporation. So when I think about it, well, if, home prices are getting out of control, and it's here in the Valley at least, it takes like, 2 solid engineers to buy a home. People are always going to push to make things happen. Consumers, majority are always going to push the effort to make it happen and not think about the mathematical realities of it. I always say that if people actually just look at the mathematics of a situation, if people quantitatively made decisions every day, they would be a lot better off. But every day I see very irrational, unoptimized decision making occurring around the world. Sorry, the circuits in my head was not registered. No, I'm kidding. Yeah, you're right. You just for trading, you kind of have to know when to switch it. I guess like be really firm. I still apply a lot of discretion, but it's like quantitative discretion, if that makes sense. So looking at the map here, right? So if we know that China is going to be off limits, I think Southeast Asia is going to benefit. So if I draw some stuff right here, let's see where. Okay, there it is. So Hong Kong's right here, right, and then Singapore is right here. So I know what's going on right now. Where let's say this is off limits, right? And if that's off limits, and over here, Korea, not North Korea, I'm sorry, but South Korea. If North Korea opened up, that's a huge emerging market opportunity. But South Korea's got the proximity advantage, so they'll invest there first. So Japan is developed market DM labor. It's too expensive. Corporations wouldn't go there. Taiwan is relatively developed as well. I don't think they'll go there. Hong Kong right now is developed. They wouldn't go there either because of the protests and the China controls. So it makes sense that these countries over here I'm going to switch it to a different color. I personally think from a geographic perspective that these countries are going to benefit, right? And that's kind of, well, not India, but Southeast Asia right here. It's going to benefit. So you want to go in there from a sovereign perspective or a multinational corporation perspective and measure how much it costs for labor, right? The cheaper the labor, then it's not just labor, but the legal system, how robust are they shady in their dealings? We're trying to come in and
So what do you think, why do you think that India would be part of the business equation?
it's just from an India perspective, it's just the distance, right? And the cultural difference. Because I think Vietnamese people or other closer nearby Asian people have a similar culture. And let's say you're a top manufacturer in China, right? And it's hurting your business because I get it from Apple or U.S. Multinational, not just Apple. Well, where would I culturally fit in next as a wealthy manufacturing leader in China? Would I go to India or would I go to Vietnam, which is relatively close, right? So I'm thinking from a social perspective as well.
So Taiwan has a better.
Yeah. Now governments around here will start having incentives to say, no, don't go there, go here, right? Because they want the money to flow there. But this is a global manufacturing demand on just countries.
But you also can't set up manufacturing bases overnight.
Yeah, you can't. So that's why I said this is going to be initial infrastructure money.
Taiwan will gain a lot more than these other countries.
But Taiwan is developed market in labor. They're looking. We're thinking about cheap labor, right? So this is all EM right here. So if I'm bullish on emerging markets, I'm going to start segmenting and seeing which EMs are the most attractive. So Indonesia looks pretty attractive. Singapore. So going back to the Singapore and Hong Kong perspective. So if Hong Kong is going to fall out as a strong financial hub, then I think Singapore is going to be spearheaded to the top, which is pretty cool in my book. Because Singapore is very strategic. If you know, like the Straits of Singapore or Straits of what's it called? I forget. Right here. So a lot of major trading happens right here, right? And Singapore benefits from this. So it's a major commodities hub, like London. So they'll go and they'll trade around to China and all that, right? So very, very important. Yeah, strategically. This is thinking too much like a sovereign, but it's kind of fun. I mean, it's like a getaway from finance. Let's see. Okay. So any questions on the map or kind of like the thesis on that?
No Philippines.
You said no Philippines?
Yeah,
Philippines, yeah, that could be as well. I'm just not too sure on their labor costs and infrastructure, but I see their economy booming as well. At least from the word of mouth from the Filipinos I know.
So do you look at these more as indicators, or do you actually invest large amounts in, or large percentage of your?
Yeah. So right now the large percentage is in like gold miners, right? But as I get the winnings out, I take my gains for a pullback, reposition in. I'm gonna have some excess. That excess will be planned to my next trade, which will be like the next commodity cycle and emerging market cycle. So it's all.
So instead of buying individual stocks, you're much more your investment strategy.
Oh, okay. So.
I'm just trying to figure out.
Yeah. It's your first time in here, so.
It is. I'm sorry about that.
No. It's we're going high level right now. I go really micro as well.
Okay.
Like we'll go deep into like SEC filings and fundamentals for like 30 years and all that.
Okay.
So I'm primarily a software focused investor. So I like SaaS most of the time because it's just like it's a winning segment. We're in Silicon Valley, and you get to network with the human capital that propelled this asset class to high levels. Yeah, we go deeper in that. Right now, it's just kind of understanding the world, setting up the puzzles of the world to dive into what we're going to look at next. Yeah.
You mentioned that the strong dollar is the factor for investing in emerging market. So how is there how much dollar is going to go down? You're going to be comfortable investing?
It's not really how much the dollar will go down. I'm waiting for indication from the governments or the sovereigns themselves to devalue the dollar, and they will naturally devalue it when things get too tight. And when we look at Kyle Bass's Hong Kong investment thesis report today, it's going to be like a little sample model of what could happen. It's why do you want to learn about what's going on in Hong Kong, right? Because it teaches you a lot about what could potentially happen to our economy or our investments in another economy, right? So it's not necessarily looking at the dollar going down. I'm looking at the decisions that they make and what will be the artificial knock-on effects after. If that makes sense. So we'll talk about it. Currency. So I have to go a little bit quicker so we can get to the Hong Kong report. Dollar. So this is the dollar on Friday. Dollar's making new highs. As not like high, but like recent highs. So if dollar went up, then gold should do weaker, but gold didn't. So what does that say about gold? Gold is there's underlying strength in gold. Right? I don't look at the MACD indicators, but I look at the relationship, intermarket relationship between asset classes. I think that's a lot more superior and confirming than a price indicator. If you look at like the moving averages or the MACD of this, or whatever RSI, that's the indicator of the price action, which is not telling me what people are doing in this major market and this other major market. So intermarket analysis to me is superior, and I like the leverage style a lot. I don't know why. I think it's just the quantitative value is superior. But this is the dollar, right? So if the dollar went up, then we didn't really see much of a pullback in gold and silver. We did. It cooled off a bit, I'm glad, but not to the level where I want to get back in quite yet. So yeah, we'll see. There's a lot of strength in dollar, in gold and silver right now. But this is also telling me that there's fear in the world, right? So that's how I'm trying to interpret the markets. I think one could really understand the markets better if you just watch it over time. Not watch it in one day, but watch it over time and pay careful attention around the times that make the most sense. Like pivot points, the part where it pivots, or a time when someone announces something, like FOMC meetings. Those are the most educational hours to observe the markets, I feel. Because it's like, you get a chance where you know that this is big news coming out, and money managers around the world who manage billions of dollars are going to make a decision based off what happens. And how markets respond initially is like, oh wow, you're seeing bets going this way. And you're like, wow, they're getting really bullish because of interest rates going lower. So maybe that's how they feel about the markets. But then sometimes it'll give you signals where you just don't know how to interpret, and it could be confusing. So that's only something that you could learn through experience and time. You can't learn it through, you could kind of get an edge with me sharing, like teaching you, but you gotta really experience it to learn it better. So looking at a bigger picture, right, dollar weekly chart. So it's not all-time highs, but this is what the chart looks like, 2018, since 2018. What do you think happened since 2018 to cause the dollar to go up? Little hints right here. All right, so if I go down, since 2018, we started tightening the balance sheet. We tightened the economy. We made the dollar more attractive. Right? Instead of lowering interest rates, we had tendency to raise interest rates or take more money out of the system. If you take more money out of the system, the dollar looks more attractive. So let's say we took money out of the system and raised interest rates. Higher rates, meaning the currency would go to the higher paying country, higher rate country. So dollar went up beginning of the year, and then you look at the Fed balance sheet, so you start to see this manipulation. Well, not really manipulation, but just market participation.
Question. So could you help me interpret this curve? So the Fed's lowered interest rate, right?
Yeah.
In early August.
Sure, yeah.
So why? So that would increase. To me, like the way I can see things happening after that is the supply of dollars should increase. But why is this price still going up after that?
So it's not you're missing other variables, right? You think that you think it's purely government manipulation, but it's also voting from other developed markets and emerging markets. That's why it's a dynamic game, because it's other sovereigns playing the game as well. That's why you want to sit down, maybe listen to Putin and what he has to say about the dollar and Russia and stuff like that. Because it's like, okay, where do you want to bet your money next? And you're betting money that you control the supply, so money doesn't mean anything to you. So what are you chasing? Is it uranium? Is it oil? Is it diversifying away from oil? Or?
So if I can just add to it, see, so one thing is currency always going to be pairs, right? So basically
Yeah.
for USD to come down, something else has to come up.
Yep.
And if you see what happened, right, so during August, European ECB also actually reduced their, so they're also actually looking at further quantitative easing. Right. So the European currency is also going down. So there's no currency which is actually keeping USD down, right? I think everything against USD is going down right now.
Yeah.
So that is why I think even if US wanted to, until they do an intervention, USD will continue to go up.
Yeah.
Right? So I think that is.
So I think dollar will go higher. It's going to be crazy, but dollar is going to go higher.
And I think
From global fear.
I think an ECB, I think they're actually going to make a statement in September 11th.
Yeah.
That's when you will really see this volatility.
Yeah. And if you remember, I said the golden signal for me is dollar rally with gold rally, which we have now.
So,
That's my golden signal. Yeah. That's the crazy part.
So I was gonna just add, as far as the dollar goes, there's like a few reasons why the dollar would move. One of them is, like you said, the government manipulation.
Yeah.
The second one is fear. So when people start.
Yeah, money managers, yeah.
Yeah,
Yeah.
they get scared if something's going on with Brexit or something else, they start plunging their money in the world currency reserves for US dollars, that goes up. And then the third one he mentioned is basically the pair currency. If everybody's devaluing their money, the dollar's gonna go higher unless we do the same.
Yeah.
So all three combined, they have a portion, and that's what determines the dollar's gonna do.
Yeah. So again, global macro is not an easy trade, but it's extremely fun because it's like the international chess game. And if you like chess, it's like, oh, you're really seeing these guys move the pieces, and you can be a little participant of it, a little tiny goldfish.
Do you think that's where opportunity is? Kind of referring to your comment. Usually funds, when there is volatility like that, they go to dollar. That's usually what they do. But governments usually not intervene like that. That's the difference today.
Yeah. So there's a lot of variables right now. It's not clean. It's not clean.
Well, that's what I'm trying to kind of mention, is that if everybody jumped to dollar, but this was never happening before, maybe dollar is not a good thing to jump to.
Yeah. So if dollar goes too high, well, think about this. Remember overcrowded situations, right? If let's say how do I do this? If dollar goes too high,
Dollar goes higher versus
I want
dollar.
to distribute as a business owner. I want to distribute dollars, right? If everybody wants financial trade ideas and it's filling up this room like to the bottom floor, then I have to start distributing to like nerf the demand, right? If everyone wants that ramen, well, you got to double down on the noodles and start distributing the noodles. If that kind of makes sense. The price went up and you want to start distributing more. So, okay, I'm sorry. So let's say a higher dollar, governments would want to start selling dollars.
If dollar goes generally, dollar goes too high,
Yeah.
governments want to lower it.
Yeah,
They want
yeah.
to keep the trade deficit.
Yep.
So the dollar may be going significantly lower compared to something
Yeah.
else, like gold, but maybe something else. So dollar may be dropping, but still going higher relative to other currencies.
Yeah.
That's why maybe do something different, because intervention from government could be really strong to try to keep it lower. Yet
And the only way
I
I think what is going to happen is you mentioned earlier, I think they have to print more money.
Yeah.
Which increase the supply of the dollar, and that's one way to devalue the dollar.
Yeah.
They have to increase the supply.
Yeah.
QE4.
Yeah, so it makes sense to me when I mean, the game becomes very simple when you think of the game Monopoly, okay? And everyone's playing Monopoly. And if you haven't played Monopoly before, I say go home. Well, no, I shouldn't say go play, but you're missing out a little bit. If you play Monopoly, and I use the example of when you get to the late stages of the game, let's say you're playing with a game of 6 or 8 people. I don't know if you go to 8, 6 to 8, let's say. And it gets to, you play for 2 hours. After 2 hours, you kind of know who won the game already, right? But you always get the sibling or the nephew or the niece that's like, no, we want to play until the end because I'm winning. Well, what happens if the game never ends, which is like right now, right? It's like we know where the assets are cornered, so, but the game's not ending. It's not resetting. So I feel like the governments are trying to intervene to give the working. I mean, if you structure the world like a corporation, right? 90% of the workers, and then you see the 10% executives, let's say. So very interesting stuff. That's how I simplify it in my head. Because I had I gotta do it back. I gotta do it one of these days. Technical discussion number 30, 27, or whatever. Today's number 130, right? I brought in a Monopoly board, right, into the Milpitas library, and I set it up, and I set some artificial rules saying that every time you go around, I'll pay you this money, right? And you can only do this, no jail time or whatever. And the 4 guys that were playing, they're not here right now. One's in Texas. Every time they go around, I would start pumping money. Instead of getting 2,000, I'm gonna give you 5,000. And just naturally, they start bidding up the home prices, hotel prices on their own, right? But what I didn't get to experiment next was to start pulling money out and see how tight they get. But it just got to a point where you just see like, okay, the money got cornered by one guy, and it's just like, it's kind of game, but it's their goal, let's say. So that's the example I give. And just a little digress, like, where are you coming from? All right, I mean, like, are you work in finance or? Okay, so you're pretty passionate about the subject too.
Yeah.
Sorry, someone online might want to mute. Okay, yeah, so, sorry, I just had like a question. Haven't seen you before, welcome. So that's the dollar, guys, and that's the central bank balance sheet. And we'll go on to the next segment. We're not even on the Hong Kong part yet, so I'm gonna go a little quicker, okay? I'm just looking at the VIX right now, volatility. It's still elevated, so just that above that blue line. VIX futures curve, so this is the indicator that I use to see what the people forecasting volatility go higher are feeling. It's kind of going sideways, so that's typically like setting up to maybe more higher volatility, but again, I'm just going quick. I won't go over the instruments, we don't have the time. Yield curve is still inverted. I know we reviewed it 2 weeks back. It's not good to look at it every week, but figure there's some new people. So yield curve is inverted. Won't talk too much on that as well. What do the bond markets look like? Well, this is the AGG ETF that tracks all the bonds. So bonds are up. Why is that? If I were to test you guys, why are bonds going up?
Interest rates are going down.
Yeah, so they manipulate, right? So lower rates, bonds go up. But the question is like how long, and
Until it goes.
yeah.
Next.
Well, so I paused for a second because like one person answered, right? And I'm thinking like, oh, didn't you guys been coming like all these weeks? I'm kidding. That's like a easy trade, right? So when I think it was August when they announced the interest rate cuts, right? And it just kind of followed through. It's an easy trade. And you see that with the bond futures as well, right? So I want to take note of this. What happened on Friday for bond futures? The 2-year note, 5-year note, 10-year note spiked up, but the 30-year went down. How do we interpret that? So the short to mid went up, but the long duration went down, or the long term went down. The long end of the curve went down.
Is it because it's averaged?
No, it's a complex question, but we gotta move on to the next part because I gotta make sure we get to some content. So something to think about. We can chat about later. Looking over at gold. So gold did really well in the last 2 weeks when I didn't see you guys. How am I looking at today? Maybe I'll start a position back into Tuesday. I think it's going to be elevated. I think it's going to be pretty hard to get like a really strong retracement, but there's a lot of sentiment. If you ask me today, I'm less in silver and more into gold. Versus 2 weeks ago, I was very heavy in silver. I sold out. Now I'm lighter on silver, and then I'm heavier in gold now. So I think the sentiment is lower in gold than in silver. Now I'm also looking at platinum starting this week because platinum started outperforming.
That's good. I think platinum, it has now, if you look at the
Yeah.
futures,
Yeah.
I think it has now crossed that resistance.
Yeah.
That will be huge.
So my thinking is that for platinum to sustain upside, if silver and gold go up, platinum will go up. But
I
if
think for platinum, I think you have to look at it with palladium as well.
palladium,
Yeah, because they are.
that's the only one I don't understand yet.
So because they're actually competing, right? Because you can
Oh,
use
okay.
palladium in place of platinum and vice versa.
Right.
That's why if you see when palladium start going up, platinum actually start going down.
Oh, interesting. Okay, I didn't know that.
And that is when, so what happened is then platinum became so cheap and palladium became so expensive. So if you see during that time, you see 2 or 3 months before,
Yeah.
platinum actually shot up and palladium came down.
Right.
Because palladium became too expensive.
So I gotta draw some charts and observe that. So that's my take on gold. I want to position more on gold than silver. Silver I'm kind of exiting out a little bit, but I still hold the investment core position.
But I think silver has more opportunity to go much higher.
Yeah.
Because gold can only go to like, let's say 1800, 2000, but silver can go up to 50.
Yeah, you read my mind over here. Silver to S&P 500 ratio, very, very low.
Yes.
Yeah, so silver could be a catapult runner.
Good.
Yeah. So I mean, there's a lot of meat on it, so potential to make some money here. Let's look at gold from a monthly perspective, right? I see the very high volume. That's really good to me. High volume direction kind of confirms the direction to me. I keep it simple, right? I focus on the execution and the risk management, not so much the drawing, the technicals that I spend so much energy. I'm like I'm paralyzed. I can't make a trade. I'm paralyzed. And then we go down. This is actually from Tocqueville Asset Management, or investment company. They're managing about $8 billion. They're pretty serious. So this is their technical analysis, not my technical analysis. So I'm showing you from a pro, right, how they analyze it. So what they see right here is a post-crisis bull market in this channel, a strong base right here, rounded bottom. resistance level at 1365, right? They're thinking new gold bull market. I think so, right? As long as the 1365 holds. If we go down, then hey, maybe more sideways to go, more opportunity. But you have to manage your risk. From an investment perspective, and you just want to invest and not look at it, I think that's okay. Because it's just natural. We're in the late stages of the game, right? The Monopoly game's been going on for 4 hours, and the kids want to go eat, right? And I'm gonna say we gotta finish it though, right? All right, I'll manipulate a little bit, you know, or whatever. I don't know. Or one kid bribed me to keep it going. All right, fine. I'll start printing money.
In a world where everyone's trying to devaluate the currency, wouldn't a smart move for one of these countries be to start dumping gold, selling it? That way that adds to their exports.
Yeah. So when I think about that question, right, you gotta be as a country, a small country, let's say, it wouldn't be a big country, because majority of the countries today that hold a lot of gold are developed markets, 70%.
Sure.
And then 30% are emerging markets. So I'm guessing maybe emerging markets would be your question.
Well, I was thinking more like China. If the trade war starts biting into their exports,
Yeah.
they could
So remember, trading. If you exit gold, where are you going? What's the store of value you're going for? We always have to. We're always in position. We're always in position.
One way to answer that question, right, is basically what the countries is doing is when they're buying gold, basically they're actually buying dollar, right? Because dollar is in gold. So what they're doing is they're actually shorting their own currency.
Yes.
I think that is one of the reasons gold is going up.
Yeah.
Right, is because every country is short their own currency.
Except for the U.S. in that case.
Except for the US,
If we want deflation, or we would actually want inflation, wouldn't Trump say start selling this gold?
Here.
Wouldn't that be a
So
smart move?
let me add another color to your topic, okay? As a bold country to do that, you're saying this is the next store of value. You better have like a lot of Bitcoin or something, right? You're saying you're not, okay, you, as a sovereign, you kind of do control people, but you don't ultimately control people, right? You kind of play with the streams of the people decision making, but at the end of the day, you try to control too much, you get protests.
Well, I'm thinking like Fort Knox, or you hear China's buying so many tons a month.
Yeah, yeah.
Couldn't they, at what point do they start selling?
I don't think they're selling.
They just buy.
Yeah, I think they're just buy to hold.
I think China's biggest.
Because it's really about securing your position. Sorry.
I think China's biggest move was when they started devaluing their currency and brought it up for 7.
Yeah.
And their next step would be if they were like to even devalue it more overnight over the weekend, go to like 7.5.
Yeah, yeah.
That would create havoc everywhere. That would help China a lot.
Yeah.
And that's why Trump gets so pissed off.
Yeah, so they talk about weaponizing the dollar, right? How you fluctuate your interest rates as a U.S. economy platform hurts every other country. So he has the leverage to kind of play this international negotiating game. But when you mess with the lever, you mess with life and death too, right? Because you're messing with aggregate decision making, massive economics, which is not cool. But that's the world we live in. So total return of gold. I'm gonna skip this, but I'm just gonna show 2 points. S&P 500 in the blue, and gold's up here, right? Just total return aggregated. We're gonna skip that because I gotta move to the Hong Kong part. Silver, pull back to the trend line. I don't think it's gonna go to the 20 MA. I think there's a lot of interest. So I'm trying to get back in, but I'm not comfortable at this very parabolic move. If you want to measure it, you could with Fibonacci retracement, or you could do like Bollinger Bands to just kind of figure out where you want to position it next. But I say don't get emotional. Be very disciplined as an investor and play when you feel like you could capitalize. So I played in a way where I felt like I need to take this and finance other positions, which I found some nice ones.
And just out of curiosity, the stock you're talking about from EHM, was it? Or,
EM?
They might actually be a silver miner as well as a gold miner.
THM. They're gold mining.
Gold. Okay.
Yeah, so they're publicly traded, so we could open them up and look under the hood and see what they do.
Yeah, I was noticing a lot of them that you might be interested for gold would also, they have silver mining.
Yeah, so I don't know if you were here in the beginning, but I said that we're all looking at miners in here, right? We're looking at billion-dollar miners. I've kind of went like downstream further, and I started looking at microcap gold miners. Because I think sovereigns or bigger gold corporations are going to start acquiring them, and acquiring is pretty fast money if you know how to play it, right? Basically, I'm saying that if I buy this, someone else is going to buy me out, and it's like one day type of money. Well, not one day, but it could be, if you have the risk capital. right? If you don't have the risk capital, I think it's still pretty solid because you're still playing gold, but at a microcap club. So it's more advanced, but I see a lot of hedge funds going that way. That's why I'm paying attention very hard to it.
What's the
OB
equivalent?
and NF, that's one that I'm looking at.
Oh, sorry, go ahead.
Oh no, that's all.
What's the equivalent of GLD for gold for silver?
SLB.
SLV.
Yeah.
Okay.
SLB. So this is the bigger picture of silver, right? So early stages, high volume, I like it, I like the activity. Simple trend line, you can draw one here and then you can draw one there. So I see directional change, $15 support. Continue to monitor, a little oversold, overbought on the daily chart, but I think it's just getting started here on the weekly or the monthly.
I think if once it crosses 21.5, I think that will be the real good market for silver.
Yeah. Agreed. Yeah, so I say this is like meat on the bone that you want to consider, educational opinion only, okay? Platinum, I like platinum as well. A lot of high volume, a lot of activity, break of the trend line right here, breakout right there. Going higher. PLTM is the ETF that I was looking at. I was kind of sad because like I have like multiple brokerage accounts, and you should have multiple brokerage accounts because when I was trying to buy it on Robinhood, right, it's like, oh, this security is not available, and I was like, oh man, right? I was gonna buy it this day right here.
Oh,
Yeah, I didn't care. I was gonna buy it that day, right? So I ended up buying on the other accounts.
So what caused the spike?
You know what? I think it's just you can't predict the spike, right? It could be a bunch of guys at a golf club, you know, just kind of say, hey, I'm gonna buy silver today, or some sovereigns are like, hey, silver looks pretty good. So the market's very dynamic. You can't tell why, but this is the visual mathematics that's being communicated to us, and we just kind of have to play it. I don't know why, right? But I would speculate that, okay, as a money manager, right, we're looking at global assets, and we're like, okay, well, looks like gold's going up. People are starting to realize gold's going up. Silver's already going up, but no one's realizing platinum. So that could be like a logical thesis of that. So platinum, from a bigger picture perspective, very low, right? Could be the early days. As you see, volume's kind of going up as the stock is going down. That's usually a good signal for me.
The thing with platinum is the demand is also going down. Overall, I think if you compare it to last decade, now more and more electric cars are coming, and I think it's also used in auto. So that is why I think when auto tariffs went up, it actually went down.
I see. So this one has more of an industrial use case, you said?
Yeah.
Yeah, I don't know platinum too well, but I'm just playing what I see
Yeah. So
and
that
really
is-
focusing on execution.
Yeah.
Yeah.
So now I think platinum is considered a base material.
Hey, have you seen the SLV lead options are so inexpensive?
Yeah, dude, it's
They're ridiculous.
so cheap. It's like $150 for a 2-year contract.
Exactly.
My God, man, it's like there's no vega, there's no volatility, so the premium's out there. But as everyone, it's competition, right?
It'll start coming though.
Yeah, it'll start coming. So like in business, right? If you want to make money in business, you have to assess competitive situations. Like I was saying earlier, like if it's overcrowded, you don't want to go to the overcrowded spot. You want to kind of nerf the overcrowd. So if everyone wants to be on the iPhone, then you want to distribute some iPhone services. You always want to be on the other side. The investment part is always boring, but that's where the opportunities are at. So always go out there and look for just overcrowded situation and think, just a little bit of thinking of how I can capitalize on that. Let's see. So, okay, going to commodities, we gotta move, okay? Commodities, just not that much action. Crude oil, kind of just, sort of bottoming. I have some, thesis on that, but we can't go over it. Copper, so copper is in a downtrend at the daily level, and I wanted to bring this up today. Uses of copper in the United States in 2017. I couldn't find it in 2019, but building construction, electrical and electronics, transportation equipment, consumer products, machinery. So this is another way of like how we could look at copper, like how I look at semiconductors, right? So if you know semiconductors are in everything we purchase from laptops to automobiles, if semiconductor revenues are going down, along with copper prices going down, then that's like a nice way to combine two powerful indicators. Just something to think about.
I think for me, copper is a very good indicator for economy because I think most of it is consumed in China.
Yeah.
And you see why Australian and New Zealand dollars are going down is because they actually supply to China. So if China is going down, you see New Zealand dollars and Australian dollars are actually very weak right now.
Yeah.
That is because they actually export most of this.
Yeah. So great indicator. I wish I learned it sooner. Yeah. So cryptocurrencies. We'll talk briefly on this. Cryptos, Bitcoin-wise, from a technical analysis perspective, is kind of consolidating, moving at this area right here. I think it could go to 7,400. though I'm still long. I mean, I'm owning a few Bitcoin, right? It's just, the reason why I don't care about the fluctuations is really this comment right here. Because I believe in mathematics, right? Mathematics is truth to me. If you own one Bitcoin, you are mathematically guaranteed to be the top 3 out of 1,000 richest in the world in Bitcoin terms.
You know, there was an interesting.
It might be a very arrogant comment, but I'm going to try and play the mathematics because sorry to cut you off, but the risk reward is like I'm risking 10,000 to be one of the richest in the world. Like I'll play that bet all day in many different planets.
Absolutely,
right?
I'm with you there, and that's what I was.
Yeah. So it might not make investment sense, but this is the risk capital, you know.
And Jackson Hole, I think one of the I'm forgetting his name, but from Bank of London, one of the person actually suggested that actually we should use cryptocurrency as a reserve currency instead of using any of the
Yeah.
world currency.
Yeah, I wanted to add on to that because if you look at this week, the Bank of England governor actually said he was for a Libra-like currency. That was breaking news of the last 2 weeks. Okay, but we have a lot of stuff to go through that I won't have time. So that's my quick analysis on Bitcoin. I've shuffled out of XRP because of the shady ownership structure of that. I don't want to go into XRP anymore. Just took the loss, clean it up, go to the next trade. So I feel mathematically bullish on Bitcoin, demographically bullish on Bitcoin, right? Going back to generational Z, the youngest generation right now, their first mobile device was a phone. If they participate on the phone, they consume on the phone, they'll transact on the phone. Right? More people with mobile devices today because the incentive to get on the internet, be connected, than having a bank account in Africa. So I think the infrastructure setup is there, the demographic setup is there, the price mathematics setup is there. I'm gonna not care about price fluctuation, buy on more dips, because I want to own a few Bitcoin, a few more. Yeah, because I think it's just this world's getting out of control from, you know, like, so let's say the Monopoly game, I'm playing with my nephew and nieces, right? And they're like, you know, you keep printing money, Kay, or Uncle, you keep printing money. We don't want to play anymore. We're just gonna trade the physical hotels. Fine. Yeah, I am. So.
No, I worry about the quantum computing, but you impact on cryptos.
Yeah. Oh, what's my opinion on that? You say?
Yeah.
I'm not strong on the technical side, so I leverage the knowledge of the group in here. So every now and then we get someone in here who's like burning desire to understand everything about Bitcoin or something. If anyone in the room knows, you know, quantum computing, I think you know quite a bit, as we discussed.
I think we are still 5 years away. I
Not
think
yet.
still we are 5 years away before it will be a legitimate.
Yeah, but if you look into the future, the cryptos are going.
So cryptos also will evolve with quantum cryptography.
I'm not playing the technology aspect of Bitcoin, if you notice. I'm playing the mathematical bullishness of it, the supply and demand, the economics of it. I'm playing the demographics of it because of generational differences in the voting power that's leaving the baby boomers and it's being given to generation X, Y, and Z. And this is the other thing too. I call it, this is a little digress, but I now call it social aggregate bias. And perfect example is a little story, right? So back in, you know, I forgot what year, it was before 2013, but Bitcoin was, okay, no. Here, this is what I mean by social aggregate bias, and I was able to finally overcome this maybe in the past year. Meaning all my decisions in life I felt were held back because of some sort of insecurity, right? But that insecurity kind of reflected in a way where my parents would verbally say that, hey, don't do this, go be a doctor, go be a lawyer and all that, right? Go get into debt, right? So mathematically speaking, they weren't making optimized decisions if we look at it today. So I remember back in middle school when YouTube wasn't even there, and I used to torrent stuff on the internet, which is basically you download stuff, right? And so I downloaded stuff on how to make money. And I downloaded a full course on Google AdSense. So you see what the story is today, right? So you know where Google AdSense kind of went. So this was a time when the internet wasn't really developed, but I was like on there for quite some time. And I was ready, you know, I was setting everything up, and I wanted to go deep into Google AdSense, you know, and just do the whole advertisement stuff. A lot of those guys made a lot of money in that time frame because that was the prime time frame. It's very about time frame. The context is extremely important, right? Because you can't do that now. You can't play Google AdSense now. You can, but there's too much competition. So again, overcrowdedness, you leave the market, you go play some other market, right? But at the time, my parents were saying, okay, you should focus on school, right? I said, okay, all right, I'll do it for you. So put down the Google AdSense stuff, focus on the on the books, focus on school, and then you know where Google came, or what happens next, right? You know where YouTube and all that came out. So I missed that opportunity, and it'll repeat. Okay, it'll repeat when Bitcoin came out, and I think I bought Bitcoin when it was $100, $120, right? And I sold at 800, thinking like, oh, this is crazy. And then little did I know, and the reason why I bought it because, well, I saw it at 50. Okay, I saw it like at 20, 30, 50, and I was like, okay, you know, maybe I should, you know, put some money instead of focus on school. Right? But I was like, oh no, my parents are gonna get mad. So I didn't do it. So Bitcoin goes to 100, and that's when I was like, forget what they said, I'll put some money into it. And I remember because I transacted at McDonald's that day. I was at McDonald's, I was exiting college, or leaving college for the day, and I was like, all right, I'm just gonna pull this McDonald's with my laptop, get on the internet, buy Bitcoin. So I did that.
How did you buy it?
At that time, it's a little bit more difficult. It's like you message someone. You email them the code, they email you back. So it was like, oh, okay, all right, let's do it. Like $100, I'll buy a few. I'm sorry, what? The timing? Oh, okay. No, all right, yeah, I'm sorry. So let me finish the story. So long story short, bought at 800, and then, all right, I'm done. I'm focusing back on school because my parents want me to. And then next thing you know, in 2013 beyond, $20,000 a unit. So I think I've been scarred in a way where I've missed out on market opportunities 2 times in terms of like the whole Google internet boom, and also the Bitcoin potential, right? I don't want to miss this one. So that's the emotional story from why I'm having high conviction on this Bitcoin trade. And a lot of guys I respect in the money management world also have high conviction on this trade.
So the $800 that you made, someone else lost it.
Exactly.
Right?
Yeah.
So that pool of wealth that's associated with that, for everyone that makes $1, someone loses $1 on an asset that has no intrinsic value.
Yeah.
So inherently you're investing.
It's a trading vehicle.
Well, you're investing in something that inherently doesn't generate value. It just exists.
So that makes complete sense from a business perspective. But if you analyze global macro and sovereign global debt, it's just like, why are we even holding dollars?
It's supposed to store value, like gold.
Yeah,
It's supposed to
yeah.
store
So
value.
now the investment thesis for Bitcoin is very equivalent to gold, easier access.
Yeah, but the only problem I see with Bitcoin and all cryptocurrencies is all the government has to do, they have to just say, hey, it's a national emergency, it's a national security, we're gonna outlaw Bitcoin, and then right overnight it just goes to nothing.
Yeah.
So that's a big
So you only take this risk if you have time premium, if you're younger. You don't.
and with a small percentage of
Yeah.
people.
Think about all the risks that you would take if you were 28 again.
Right.
And share some with me. So tell me what I should do. Okay, we gotta move on to the next segment. So I'll skip Litecoin. Local real estate prices. I'll be real quick on this. I was just going to review the local prices to make sure we kind of finish off by 12:30 today. Let's say. So Palo Alto, the king of the area. Let's say, at least in my eyes. Palo Alto, Cupertino, Milpitas, and San Jose. Right. Median price 4.2, 2.3, 1.2, and 1.2 as well. What is the trend that we're seeing? Not that much in. We see a lot in price decrease right here, 40% price decrease. Price increase in Atherton or Palo Alto is about 8%, 6% over here. Not a lot of price increase in Milpitas, and not a lot of price increase in San Jose, right? The overall market action, this is like a consolidated score, like it's like the index, the S&P 5 index of Milpitas, of Palo Alto. So Palo Alto's been going sideways, it's holding price very well. Cupertino is kind of slightly in decline, just a little bit, but if you look over here, the median price is kind of sideways as well. You look at Milpitas, Milpitas is higher than Cupertino, right? Probably because it's not as low, but sideways, so nice to see. But San Jose, little decline. That's all we're seeing at 46.
That's the Russell 2000 of the whole thing.
yeah. You could say this is the S&P 500, the Nasdaq, the Dow Jones, the Russell, right?
So that means the price decreased, but not by that percent.
There's no. There's a trend. Yeah, the trending of it decreasing.
Is this month to month or year to year?
So this is when I pull the data. It's live transactions.
No, I mean the price decrease.
I would say that's a good question because when you pull it, it's that moment. So it would probably be going the last. I have to look at the data. Maybe the last several transactions within reasonable time. So I'd say within a year, maybe within a quarter. Yeah. Sure.
So it is a seller's market? It's a
buyer's market.
Because the price is strong seller market.
Yeah. So because it's like, oh, well, your asset appreciated, and if prices have a little tendency to go down, they want to sell, right? So right now, if you pick up the phone and call neighborhoods, there's higher probability with the global volatility that they'll say, okay, we want to sell. So, but then the issue is that when they say we sell, we list it, no one wants to buy. And so, like as a realtor, you're like, well, hey, it's going to be more than 30 days. It used to be less than 30 days. 2 weeks, you put it up, it gets sold. Now it's going to be a little bit longer, 60 days.
But
So,
that means you're paying Palo Alto.
so days on market, right? I didn't analyze it. So Palo Alto days on market 85, Cupertino 56, Milpitas about the same, San Jose about the same as well.
So Palo Alto, you're paying $1,700 a square foot for a house, okay? So even if it goes down $50, that's like Malibu, that's like movie star prices. I mean, that's amazing that a 2,000 square foot house is $3 million.
So,
I mean, that's
I won't go
astronomical.
into detail today, but the money, real estate prices derive from the residential purchaser's ability to borrow money, and their ability to borrow money comes from high-paying jobs. That comes from corporate
Absolutely,
prices, right?
absolutely.
So if you're a corporate executive, you live here in Silicon Valley, you buy back your own shares because of the whole corporate buyback bubble.
Right.
Then you have more purchasing power because you made money on your shares. So that's the quick and easy. I won't go deep into that because I didn't know I'd go this way.
What's the data source?
Say again?
You say what's the data source?
This is from Altos report. Our team pays for it. Our real estate team pays for it. Yeah. We could chat after. I'll show you additional reports if you like. Trade ideas I'm going to skip because I want to go into the Hong Kong part next. I just had some trade ideas. Gold miners I'll probably skip to the end. Yeah, because I want to really go through the Hong Kong part. So let's see. Uranium I'll also skip. So this is a commentary this week. So this one, this is where we're at next. So so this is the one that you were talking about. The governor of Bank of England. Yeah. This is actually breaking news if you guys didn't know. But I'll just summarize it because of the time, right? Proposing the two things that, the takeaway from it, you could listen to this 13 minutes on YouTube or wherever, just Google it, right? Proposing a Libra-like central bank virtual currency to remove the US dollar from its central position in the world's payment and reserve currency. The breaking news means central banks are working towards a virtual SDR solution.
What is that?
SDR is like a basket of securities.
What's considered the
Central
central
better
banks?
get a military.
I'm sorry?
What's considered the central banks?
Federal Reserve, Bank of Japan, People's Bank of China.
Yeah, but US banks, I mean, the US government doesn't want that to happen.
Yeah. So that's the only one, right?
So
So
central banks is
that-
definitely not the US.
Well, this is why this is the Bank of England,
Yeah.
right?
And that's an X, right? Like, he used
Yeah.
to-
So he's about to leave and he's making these like crazy statements, right? So you see, it's kind of like a poop show, right? I don't know. So if you know that, then this just kind of reinforces my Bitcoin thesis. I don't know. I have the time premium. I think I do. I'm going to take some risks on Bitcoin, right? Number two, the Bank of England will raise interest rates gradually if there is a Brexit deal
But let's say if they do come up with something like a Libra-like currency.
to make the
No, but
the currency more attractive.
But would it adversely impact on Bitcoin? Because now you have a legit.
You have a more stable currency, is that what you're saying? Or?
It's like backed up by the government.
Yeah.
Instead of Bitcoin, so would
You
that
know,
then-
I just don't underestimate technology anymore. I believe the future is going to be more about data than cash flow because cash is just so easily printed, right, by the sovereign. So I'm talking about Bitcoin. I'm sorry, but I'm not gonna disrespect technology anymore. That's how you're gonna make a lot of
let's say
money
they
fast.
have a Bitcoin-like currency, but then there's no utility of that Bitcoin, right? Because the government.
You're talking about the SDR solution?
Yeah.
That's just a basket of currencies around the world. So the currencies around the world can still devalue that.
Actually, I was talking more about this Libra-like central bank virtual currency.
Yeah.
So if the governments are backing that,
No, he's not backing that. He's just saying, hey, this idea makes sense in a monopolized dollar world.
so if that materializes, it adversely impacts Bitcoin.
It's not easy developing a monetary tool for the global 7 billion, 8 billion people in use, right?
You know the
Because think about this is only going to work when I hate to say this, right? There's silent generation, which is kind of exiting the world, the baby boomers, and then the X generation, the Y generation, and then the younger ones, Generation Z. For that to be fully into play, I expect the curve to be Generation Z and beyond. Because the Generation Z and beyond are going to be the believers of the tool, right? Whatever the baby boomers are saying, their voting power is decaying over time. not trying to be mean, but just objectively speaking about the economic situation, the economic demographic situation. So, okay, we'll move on to the next component. All right, guys. I think that's Trump tweet. We already looked at this earlier, so we'll skip that. So, maybe this will be where we close it out. But you guys are still hanging out and chat about anything. So this is the legendary Kyle Bass, hedge fund manager who manages money in Dallas, Texas. He has a short position on Hang Seng, I believe. He didn't disclose, but basically like the S&P 500 index of Hong Kong. And so he came up with all this forecasting of what Hong Kong is happening today. And if you guys aren't following the news, I could share a little bit. If you guys want to see the scariness,
Sure.
for those of you who are not comfortable, I say don't look at it. No, really. So it's going to be a little scary, okay?
This is an emergency. The station is closing because of a serious incident.
Alright, that's enough, okay? So you guys can watch that on your own time, but that's the situation in Hong Kong right now. So you want to know the gist or the story of what's going on, right? It's a situation where it's so intense, and politics are involved, sovereigns around the world are involved, money managers are involved too. And so Kyle Bass did a very intelligent analysis of the report. He released it here. If you want it, let me know. I'll send you the link. But Kyle Bass is a hedge fund manager who's betting on this trade right here. Hey, see you, man. See you, Raj. It's a big short, and I just think his investment thesis is absolutely beautiful, right? To really play the situation here, and if you follow the news lately, a lot of the tycoons of Hong Kong left to go to either Singapore or Europe. We're talking about tycoons, right? You got $1 billion in assets. You don't want your assets to be frozen by China, because they're going to get that ability to police you, which is the situation. So who is Kyle Bass? That's who Kyle Bass is. What's his big short? I think this is his short right here. And I think he was positioning around April. Because in April, he started voicing it out a lot. Late April. So if he's short the index, then I think that might be the position. I don't know how he's positioning in terms of instruments, like options or futures or whatever. But just I'm sure he's leveraging, because it's a hedge fund, right? Hedge funds are leveraged funds, so you want to leverage for more money. But yeah, it's in a downtrend, the Hang Seng. So why is this important? Why should we look at this report? Well, I think if you analyze every global recession, it always starts somewhere in the world where no one's looking, right? There's several places today, but this is one that's really getting augmented by social media, the information. So this could lead into further September, October volatility is how I feel about it, right? Because if one index is selling out, and if there's serious risks around currencies related to the Hong Kong dollar and the peg, right? So they need to exit that and go to the dollar. So this could cause the dollar to go up, which tightens our economy. So the situation really sets up in a way where volatility is coming. And it's kind of hard to remove the situation by saying, well, okay, everyone in Hong Kong, the streets are filled up and it looks like ants from a high level, filled with ants. It's not something that you could say, hey, stop. It's gotten past, when humans express emotion, right, from an individual level, dude, this is aggregate emotion going in the same direction, right? This is serious. As a human, colony or whatever, as a whole, you're seeing serious asymmetry of value here. This is not fair, and so this is how we're seeing people respond. And there's, like I said, money managers, sovereigns, they got all their eyes on it right now. So Hang Seng, that's where I think he's positioning, but I'm not 100% sure. He doesn't disclose his positions. So that's why it's important. It might cause our economy to see some volatility. One other reason is it's a world-class investment thesis from Kyle Bass himself. If you think how a hedge fund money manager thinks, I think it really helped you out in building out further investment thesis of the future, right? He is a manager with credible track record and reputation. It's also economy modeling in real time, right? Because this is not the first time this happened in history. It's just no one really studies history. as I'm getting older, I'm actually learning to really enjoy history because you start thinking about like, oh, like, you know, they were raising interest rates in the Roman Empire. So it's financial history is actually pretty interesting. The lesson and takeaway from this report serves as a great economic model around asset price inflation and currency manipulation, right? Because the situation right now is going to really affect the currency as well as like the people of Hong Kong. Early signs of global recession. This initial event here in Hong Kong could be the kickstart to something bigger. Who knows? But it's really important. Importance of Hong Kong to China. So here's something that I highlighted from the report. Hong Kong is currently the center of China's ability to raise dollars in Asia. China is desperately short of US dollars and therefore needs Hong Kong to remain a non-tariff, most favored nation trader with the United States and the United Kingdom. Financial teetering coupled with political uncertainty could abruptly change the complexion of the foundation of investments in Hong Kong and throughout Asia. This is serious because it's a financial hub, a top 10 financial hub of the world. And we're talking about a top 10 financial hub getting this type of, you know, I don't know how it's going to play out next, but the whole protest in a nutshell is really China wants to police Hong Kong, and Hong Kong's like, well, we don't want that, right? Hong Kong protest chaos equals eventual volatility. Okay, so this is just natural economics, right? If you remember what I drew right here, anything that's like too prolonged, it will retrace. It's just like human emotions, right? If you're just like, you're down and out, well, you're going to bounce back one of these days, hopefully. Maybe a buddy will notice and come in and pull you out, buy you a beer or whatever. I don't know, man. But that concept applies definitely to economics and stuff like this. So a prolonged economic expansion period eventually leads to volatility, question mark, but not really question mark. Hong Kong protests, so I'll read some. She is proposing, or rather requiring, the Hong Kong government to overhaul its extradition laws by introducing legislation intended to instruct Hong Kong to send fugitives to jurisdictions it doesn't have rendition agreements with, basically allowing China to police Hong Kong and bringing them to China to, you know, giving them the punishment, right? The key problem is the fact that China itself can drum up a charge that is illegal, right? They could be shady and draw out a tycoon from Hong Kong, so that's why they're leaving. In China and Hong Kong, and immediately demand an extradition. The presumption will be guilt if the alleged offense is a criminal offense in both jurisdictions. Imagine how we would react if like China said like, okay, let's just say it happened to the U.S. That'd be crazy, right? To you know, ability to do that. So I showed you guys the violence, so that's what's happening right now. We'll see how it plays out. Let's be more appreciative of the peaceful times. That's what I put. So let's jump into the report. So this is the legendary report, April 22nd, very fresh. I highly recommend to read. It's only 15 pages. It's technical and robustness, but if you put in the time, it's a lot of beautiful writing in my opinion. So the quiet panic in Hong Kong by Hainan Capital Management, right? Today, newly emergent economic and political risks threaten Hong Kong decades of stability. These risks are so large that they merit immediate attention for both fronts. I want to read this part. In this letter, we will discuss the origins of Hong Kong's impending crisis, a brief history of Hong Kong, the economics of currency boards and pegs, pegging a currency to another country's currency, the agreement that governs the United States' economic and political relationship with Hong Kong, and how Xi Jinping's China is forcing the Hong Kong government to violate the agreement that requires Hong Kong to maintain its autonomy or lose most favored nation trading status and be treated as China itself is treated. Sorry, it's quite a paragraph. Some charts, right? I like to simplify things, but this chart right here shows how dependent China used to be on Hong Kong, which peaked in 1993. So China used to be very dependent because it used to be Hong Kong used to be 20% of their GDP, right? So after that, they kind of, you know, outsource other efforts and stuff. That caused Hong Kong itself to transform. So this is just a little history and how significant this is to China. Let's see. The economics of Hong Kong have changed dramatically since the global financial crisis. Hong Kong was vitally important to China's economic position. China has spent heavily on its own port infrastructure and therefore much less economically reliant on Hong Kong today. So they built out their own ports, invested in infrastructure money, just like the whole, this sounds like that Vietnam supply chain thing with China, right? We're going to see infrastructure money fly around. Hong Kong was widely known as China's southern port. As China built out its own port infrastructure, Hong Kong was forced to reinvent its economy into a service exporting economy. Hong Kong transitioned from a major global exporter to a net importer, right? You're pulling resources in now of goods while simultaneously becoming a service exporter primarily to mainland China. In economic terms, this transformation has been placed rather suddenly in the past decade. This is, to me, this is like beautifully written or fascinating because it caused an economy to change itself completely in 1 decade. Isn't that crazy? Right? I think technology could do that, but this was like artificially driven by governments. So if you look at the current account, right? I'm not going to go into deep details of this. It shows that before the 2008, they were very goods driven, and then after that, they were very services driven, and not so much goods. Right? They're importing goods. Hong Kong's golden years, 2008 to 2018. Hong Kong became the world's top beneficiary of the United States emergency. Wait, what segment is this? Okay, Hong Kong's top beneficiary of the United States emergency monetary policy. I'll explain this. Hong Kong currency is pegged to the U.S. dollar. Hong Kong's interest rates must move with its anchor currency rates. Now, this is the part where you have to know economics, right? I'm going to read it and I'm going to break it down for you, real simple. Its last trading partner, China, was preparing to grow credit to the tune of half of its economic output, desperate effort to stimulate GDP growth. Thus, in 2008, interest rates in Hong Kong collapsed essentially to zero in lockstep with the United States, okay? While China began an aggressive credit expansion. That's where the key is. It's no wonder why Hong Kong real estate became the most expensive in the world, because they had two underlying monetary powers, right? They anchored themselves, their currency, the Hong Kong dollar, to the US dollar. In 2008, when this interest went to zero, that gave leverage for their economy. At the same time, China started printing money. So this cost a lot of money to flow into Hong Kong. And so they're talking about how prices have been really inflated. You see how I'm kind of developing the story or report here? If things get really inflated, why is he betting on the short side? It's because he sees that it's out of control, it's unsustainable. So those are the two factors, right? Again, this is a very unique situation because it's monetary manipulation from two different sovereigns. One is China's printing money, and one is like your currency is pegged to the dollar, and the dollar lower interest rates. So you're lending at lower rates as well. So if you're giving cheap money to people, they're obviously going to buy homes, companies, stocks, whatever. It's no wonder why Hong Kong. Okay, I read that. Free money in Hong Kong and double-digit credit growth. Those are the two factors. And China drove the greatest economic expansion in Hong Kong will ever experience. Right? So that's like saying Holmes went to the moon. So I think this is where he's setting up his thesis to short the markets as a fund manager. I explained this already. Free money in Hong Kong. So I've repeated this. I won't read it because I know you guys are getting tired. This was quite a dynamic session today. Maybe I don't know. So this is the Hong Kong property prices, right? In terms of office, residential, and retail. Retail is like shopping center. Residential is like, homes you buy, and then corporation or corporate offices. So prices just went parabolic, right? Why is this important again? Because we want to listen to what we're going to do with our interest rates, right? Because the U.S. kind of pushes the world. So this might set up that emerging market play that I'm kind of eyeing right now. The result of easy money. As a result of easy money, Hong Kong's overnight lending rate went 0.5% for 8 years. Hong Kong's residents, banks, and companies did what anyone else would do. They borrowed, they geared up, and they levered. Right? They leveraged to buy assets, which people do here in the U.S. quite a bit. Hong Kong private sector leverage is now the highest in any nation in the world. He's setting it up again, right? Prices are at all-time highs. Leverage is at all-time highs. What does it look like compared to other major developed markets, right? You got USA and Japan, Hong Kong right here. Credit expansion. So it's really levered. This is why it's, setting up that bet. Keep in mind, again, this is from a hedge fund manager, not from an amateur. This chart shows how leveraged Hong Kong's economy is compared to other major developed markets. So they're more leveraged than the major markets, the US and Japan. This goes into some history, but I'm just going to read the highlighted part. The primary determinant of the sovereign's failure in each case was the fact that each country had allowed their banking sectors to grow to almost 1,000% of GDP. He's just leveraging history now to show that, you know, this is nothing new. This trade is nothing new. It's new in modern times for Hong Kong, but we've seen this, you know, sovereign show over and over, is what he's saying. In fact, Hong Kong's banking system is one of the most levered in the world, approximately 850% of GDP. The Chinese government will most likely have to step in to save the Chinese and Hong Kong depositors. This sounds like the bailout money that we had in 2008, right? So it's repeating itself. But may not bail out foreign depositors. That kind of sucks. The moral of the story, that means exit, if you're a foreign depositor, that means you have assets in Hong Kong, you need to translate it to Hong Kong dollars and then to US dollars to get out, right? It's a process for you to get out, especially if you have commercial real estate, that will suck. Because you're playing that chart, right? The moral of the story for Hong Kong depositors is to be extremely wary of which currency and which bank they keep their savings in. So, interesting times. The elephant in the room. Herein lies one of the key problems in Hong Kong's monetary authority, called the HKMA, their central bank. The highest leverage on record, mortgage loans that float and reset monthly, and rising rates put the HKMA into a classic prisoner's dilemma. He's saying that this trade has one outcome because the economics are so stretched on the monetary authority side, the central bank side, just like us in a way, and also the situation where rates have to rise because of currency peg. It's kind of complex, I know. Let me know. Let me know if you need any help on the explanation. If the aggregate balance goes to zero, we expect Hong Kong rates will spike. This is his thesis right here. I think Hong Kong interest rates will spike on a tight leveraged economy. Right? If interest rates go up on a tight leveraged economy, that's putting pressure on asset prices. And so he's short the market. So this is the explanation of the thesis. And their banking system could collapse. Because it's Hong Kong currently sits atop one of the largest financial time bombs in history. Amazing investment analysis, right? I think I'm going to keep it there, guys.
Has the rates went up since April 19?
April 19.
Has the rate gone up?
I haven't checked that. It goes into detail here, but I think I'd like to end it right there just because of the time. Because I know you guys are all like, damn. Like
How to get exposure then, as a retail investor?
So you can use the ETF that tracks Hong Kong and short that ETF, right? Buy put, yeah.
Okay, can you show the next chart? What was that?
Yeah.
There was a parabolic chart.
So I was going to stop it there because it sounded kind of good right there. I'll answer your question a bit. You're talking. Oh yeah, you're talking. That's the dollar and Hong Kong chart. So I'll show you. The chart you're talking about is this one right here, right?
Yeah.
So USD to HKD. So if this is really high, that means Hong Kong dollar got really devalued, right? And so they have to raise interest. They think interest rates will spike. If interest rates will spike, then this will come down.
Yeah.
But this is the curve that he's shorting essentially, right? He could be positioned in currencies, in bonds, in local real estate. I don't know how he's positioning, but he's gonna do it some way. He's gonna find someone out there that's willing to place the other side of the bet and execute that bet. Is how I feel about it. Yeah. You had a comment?
This is a report, public.
No. Oh.
Public economy.
Well, yeah. I saw you raise your hand in the back.
Oh,
Yeah. Sorry.
So given the situation in Hong Kong right now, I know the Tencent is listed in the Hong Kong stock exchange.
Yeah.
So how do you think it's going to affect Tencent?
Yeah. So Tencent is listed on Hong Kong, but it's not necessarily headquartered in Hong Kong. So if the index declined, in my opinion, the Hang Seng index, the Hong Kong index declined, I think it'll pull it with it, but not as bad as like the ones more exposed to Hong Kong. So I think it's going to be exposed to it because of proximity, right? Index proximity, geographic proximity, country proximity. So it's going to go. I mean, it pulls everything, but we'll continue to monitor.
Is a report publicly
Yeah.
available?
Yeah. Shoot me a message. I'll send it to you. Okay, but guys, I promised you guys 12:30, so I'll give you 8 minutes back.
There's some donuts up, by the way. Help yourself.
Yeah, let's call it here. Hey, no, thanks guys. Thanks for the. Hey, you're welcome. You could hang out, chit chat, but I'm gonna call it right here. And we didn't go over the carbon black and VMware stuff, but that's okay. We talked too much.
able to
Sure, just one second.